This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I didn't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Mateo in Berlin with Pantera in support of Pantera. John Tucker in today. We welcome you on a Super Bowl weekend with the Super Bowl jobs report coming up. And, all my attention here, this is not normal. Lots of revisions, important revisions, Paul Sweeney.
Exactly right. The big number today, Tom, 8:30 a.m. Wall Street time, change in nonfarm payrolls. The consensus number is 175,000. The whispered number is higher, about 198,000. WHIS go is get you there. So we'll have a whole bunch of labor data. We have University of Michigan coming up at 10 o'clock as well, so we'll be on top of that.
Mike McKee, usually he gets in on jobs day about 8:10, 8:15. He got it early this morning.
Oh, good.
And I asked him if there was a whisper revision number. The number was 818, negative 818, fewer people over, I think, 12 months. Anna Wong, she'll be with us later. Yep. She models negative 600,000.
Okay.
Mike McKee, I said, I need your revision number in Chiefs or Eagles, and he would give me neither.
Exactly. So
struck out.
A lot of data coming out here would be good for the Fed as it thinks about what to do next couple of meetings here.
We're going to look at the markets here. Jim Bianco, Priya Misra here, up in a moment. Right now, to the Interactive Brokers Bloomberg Business Flash, not quite as good. John Tucker.
Dead flat as far as the futures head of the jobs number, non-farm payrolls, 8:30 that comes out. And again, as you say, consensus 175. And McKee says, look at the potential revisions. Amazon says growth could be lumpy, can't keep up with demand for AI stuff. Down close to 3% pre-market. Now, if you use, this is interesting, the MODL function with the stock, you'll get every imaginable number in their statement, and down near the bottom, how much money the company has after it pays all its expenses. That's like $36 billion. The Spark, gone from Nikola, the electric truck maker, exploring possible bankruptcy filing. They only went public, I should point out, through a SPAC in 2020.
That worked out.
Yeah, well, Take-Two shares the jumping. The video game company reiterating the full-year net bookings guidance. They reiterated its plan to launch the highly anticipated Grand Theft Auto 6 in the fall of 2025, a game popular among the next generation of carjackers. Bloomberg sources say Apple plans to unveil a long-anticipated overhaul of its iPhone SE in the coming days. And this is actually the only piece of news that really matters this morning. Monday, McDonald's is reintroducing the seasonal Shamrock Shake. Fast food chain reintroducing Uncle O'Grimacy, the character first created in 1975 to promote
a font of wisdom
the seasonal shake. S&P futures up 1 point. NASDAQ futures down a point. Dow futures up 37. Do yields real quick. 422 on the 2-year, up a basis point. The 10-year, where's Lisa? Unchanged, 443.
We're going to Berlin.
Check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg.
You think he'll do better next time?
Oh,
it's like a 50-50 shot.
Yes.
John Tucker, thank you so much. The 10-year real yield, yes, 2 days in a row. I got for a cup of Sanka, a 1.99, but right now lifting up above 2%, 2.0 at 2%. We start strong with James Bianco of Chicago and Bianco Research. No one, and I mean no one got out front on a resilient, sticky inflation like Jim Bianco. Lindsay Piegza did a great job, working at a Wall Street firm like Stifel, saying, we're going to have this persistency of rates. But Jim Bianco was like Columbus coming across the ocean. Jim Bianco joins us now. Jim, you mentioned in your note this morning you still consider inflation sticky. Define sticky.
Something above 2%, which is where it is. Let's, use the CPI number. Core is sticking at around 3.3, and the headline number is in the high 2s, and that's been pushed down a little bit by low gasoline prices. But if the Fed's target is to get it to 2% or lower, I don't think we're going to get there unless we have a recession that kills demand and brings it down. So its natural rate is going to be something like 3%, and that's what I define as sticky.
I get the idea they want to get back to what they knew before. There's a comfortable idea there. But if you have nominal GDP, productivity, the technology overlay, and the Chicago Cubs ascendant, the answer is you get a persistency of growth. Is that what you modeled, Jim Bianco?
That's exactly right. You're looking at an economy at a nominal growth rate. That's the real growth plus inflation, running at around 5%. Now, what does that mean? That means that like the neutral normal interest rate you should expect in an economy should be around 5%. I think the problem the Fed has and everybody else is the anchoring bias that they got so used to zero for such a long period of time that they thought that was normal. That was the abnormal period. A 4, 5, 6% rate is normal right now. But the problem is, if you're in the real estate business and you hear me say 4, 5, or 6% normal, you've just spit your coffee out. But this is the environment we're in right now. We need to accept that this is the environment we're in.
So, Jim, with a sticky inflation, as you call it, and a labor market that seems pretty solid, we'll get some more, obviously, data today at 8:30. What do you think this Federal Reserve should do?
Well, let's talk about what they will do quickly.
Okay.
They held in January. The markets are pricing in a hold in March and a hold in May. So then, we're now looking at potentially the Fed cutting rates by June. I think if they could make it to that point to June without cutting rates, I think we could then turn around and say that the rate cutting cycle ended in December.
Okay.
And that cycle is now over. It was 100 basis points over 3 moves is what they cut. Only if we were to see some deterioration in the economy in the next couple of months would I change that view. So I think they should stop. And the markets are kind of coming around to that view because we've pushed out the next rate cut to June right now with the way we're pricing it.
Stocks, bonds, cash. What do I do in that kind of an environment if the Fed's not cutting?
Yeah, I've called this the 4, 5, 6 market. And what I mean by that is that over the next several years, you should expect cash to return around 4, as we talked about with interest rates. Bonds have a coupon at around 5 right now. And I think that you could get the coupons around 5%. And stocks, given the high valuation in stocks, Robert Shiller at Yale University won the Nobel Prize in 2013 on his valuation model, saying the higher the valuation, the lower the future returns. I think we're looking at 6% on stocks. Now, that's not bad. That means that bonds will compete with stocks. But I think more importantly, it might be a return to the stock picker capitalism market where you pay a professional investor to find good ideas that beat an index. The problem in the last couple of years was when the index goes up 25% a year, it's really hard for a professional investor to add any value. But in a lower beta environment where the market returns 6, I think we're going to return to stock picking again.
Alpha, beta, gamma, delta. Coming up, Jim Bianco on Epsilon. We welcome all of you on your commute across the nation here on Apple CarPlay, Android Auto, Sirius XM. James Bianco with us in Chicago. Priya Misra to come up here on a jobs day. Zentner and Sahm will be with us in the vicinity of the 8:30 mark. Jim Bianco, at the bottom of your note, you do say that active manage. What does active manage equate to? Very narrow sector choices, or you sprinkle it around?
No, I think active managed, is thematic picking. I think it's, stock picking. It's somebody making judgments on this is a good idea, give it money. This is a bad idea, take money away from it. Instead of let's give money to the index and let everything go up, or let's take money away from the index and let everything go down. I think that active management would, enhance the economy even better, because that's the whole point of capitalism, is to reward the winners and punish the losers, and we could get more back to that kind of investing style.
Jim, on the fixed income front, I mean, a lot of folks probably would be pretty comfortable in the Treasury market, 4.25 on the short end, maybe 4.5 on 10-year. Do I stay there, or do I take some credit risk out there?
At this point, if you have to take a risk, if you want to reach for yield, I would rather do it in mortgages. I would rather buy, mortgages that are yielding 5.5 or 6%. taking the risk. What's the risk in a mortgage? Interest rates plunge, you get refinanced, and then you're handed a bunch of cash at a lower interest rate, as opposed to taking a credit risk right now. Credit spreads, corporate bond spreads look a lot like stocks. They're fully valued, if not overvalued. And I'd rather take that risk in mortgages. And if I wanted to play in credit, I'd probably move further up what we refer to as the capital stack and probably buy bank loans.
Jim, we're kind of right smack in the middle of earnings season. Any takeaways for you? It seems like it's kind of been, I don't know, mixed at best.
Yeah, that's a good way to put it. I do think it has been mixed. Right now, there's been this big obsession over the Mag 7 companies, and rightfully so because of their dominance. But when you take them away, I think it's been kind of a fairly middling type of earnings season right now, which is kind of what you should expect in this type of environment.
I look, Jim, at where we are. Let's call it early 2025. You've been so good. You mentioned single-digit equity return there. Does GDP sustain past 4th of July? Do you have not a lumpiness, but a diminishment or lessening of nominal or real GDP out into this year?
No, I think it can. I think it can stay, where, the inflation rate churns out, in the high 2s, low 3s, and the GDP rate churns out into the 2.5 range, and that gives you that 5 real. And I think that can churn out. Now, what I didn't mention, I should mention now, is I am in the camp that this is a K-shaped economy. I've talked about the top line. K-shaped meaning if you're in the bottom half of income, that 3% inflation rate can be a problem for you, because unless you're getting a 3% raise, everything's going to be 3% more expensive, whether it's your rent or your food or everything else. Where the top end, they'll own stocks, they'll own real estate, and that will at least go up by that much and help cushion those higher prices for them.
For Global Wall Street, Priya Misra with us here to get us out to about 40 minutes. Jim Bianco with us right now to have Bianco and Misra to get us started as the way we roll today. I look at the real yield as the Global Wall Street metric. I'm using the 10-year. Jim, I know you use something more sophisticated, but the observation I have is it's come down over the last week or 2 weeks. It was a 220. All of a sudden, I'm printing 199 for a cup of Sanka. Here, what is the significance of a lower inflation-adjusted yield?
Well, I think if we look at where the real yield is in general, is you're right, 2% to 220 on the 10-year yield, and of course, that's the 10-year yield minus inflation. People have looked at that and said, that's roughly in the range of a 15-year high. But I'll go back to what I said earlier. Watch that 2010 to 2022 period and think about that as being the abnormal period when we had zero and negative interest rates. And if you were to look at real yield, say from the 1970s to 2008, they averaged 2.5%. So a 2%, 220 real yield right now is about average for a period where we don't have zero negative interest rates and quantitative easing. We actually have quantitative tightening right now. So that's part of the bigger mosaic that I'm trying to say. This is normal, what we're seeing right now, where everybody is really trying to paint this as high interest rates, maybe being restrictive. Jay Powell talked about that last week, that interest rates are still restrictive. Right. And what I'm trying to say is, no, they're not. This is actually normal.
Well, in our Ute, when the Cubs won, 4.1% was a miracle unemployment rate. I mean, is it as good as it gets, frankly?
I think so. I also think that the unemployment rate has got some kind of an issue trying to measure it.
Because of the population and immigration.
Right. The unemployment rate is a measure of the population, a certain thing that they're doing, whether they're employed or not employed. Well, the population has exploded higher in the last 4 years, and therefore it makes anything related to measuring the population a little bit more difficult. So I think that the unemployment rate is going to be harder to measure. But that said, I think you're right that we're at levels of historically low unemployment or high levels of employment, and I think we're going to stay there. And that fits into that idea that the economy, just at least at the top line, continues to churn about.
Jim, the U.S. dollar's had quite a run since late September, up 6-7% here. What's your view of the dollar and how it might just impact these markets?
what the dollar seems to move in lockstep with is U.S. interest rates. When U.S. interest rates go up, the dollar strengthens. When they go down, it weakens. Now, it doesn't always do that, but it's doing that right now. And that makes sense because it's the interest rate differential between us and another country that really drives a primary driver of the dollar's level. But I also think that what was baked into the dollar over the last month or two was this idea that we were going to see tariffs. Because if you see tariffs, the response of the country getting tariffed, like Canada, Mexico, or China, is to devalue their currency or have the dollar go up. Well, we had tariffs at the beginning of the week. I know it feels like 2 months ago, and the president cut a deal to delay them for 30 days. And I think that some of that extra dollar strength that we saw on the fear of tariffs might be coming out of it. And I would see kind of it continuing to drift lower, even if interest rates stay at this level.
Jim Bianco, thank you for getting us started on this jobs day. Just really great to get a good summary there. And again, folks, he's been lights out on sticky inflation. There's no other way to put it. Futures are flat. It's got the jobs day feel. I mean, It's like barely moving.
Yeah, we'll get going at 8:30.
Somnolent. Red is for the Chiefs. Green is for the Eagles on the screen.
Oh, I see.
That's how that works.
Yep.
So it's like indeterminate right now. There's no blue on the screen. Lions.
No, there is not.
There's no nor bills, I should say, as well. On DXY, I got a 107.83 on DXY, churning there, along with a lot of equities, bonds, currencies, and commodities. The VIX, 15. Wow, bull market, 15.30. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul John. A second federal judge has blocked President Trump's executive order rescinding birthright citizenship. A day after a judge in Maryland blocked the president's order, senior U.S. District Judge John Kuhnauer in Seattle issued his own preliminary injunction accusing the president of trying to change the Constitution.
There are moments in the world's history when people look back and ask, where were the lawyers? Where were the judges? In these moments, the rule of law becomes especially vulnerable. I refuse to let that beacon go dark today.
Meanwhile, another federal judge is putting President Trump's buyout offer for 2 million federal workers on hold after unions called it arbitrary and unlawful. The administration says more than 60,000 government workers have taken the buyout deal. Authorities are searching part of Alaska's western coast for an aircraft that went missing while carrying 10 people. A Bering Air flight went missing while heading to Nome with 9 passengers and a pilot. The NTSB briefed lawmakers on the deadly plane crash and the Black Hawk helicopter accident in Washington. Investigators say that Army helicopter was flying above the maximum 200-foot altitude when it slammed into the plane as it made its final approach to Reagan National Airport. The NTSB saying preliminary data confirms the pilots of that Black Hawk were wearing night vision goggles at the time of the crash. Get ready for another round of winter weather this weekend. Bloomberg meteorologist Rob Carolyn has the latest.
Michael, yet another winter storm headed towards the mid-Atlantic and Northeast for this weekend. Winter storm watches are up for the New York City area and for Boston Saturday night and into Sunday. We'll see snow, sleet, and rain developing in the district tomorrow afternoon. It changes to rain there, not a big deal, but we could see 3 to 5 inches of snow in the city during Saturday night and into Sunday, and more the same in Boston. I'm Rob Carolyn, Bloomberg Radio.
Thank you, Rob, and we will have more with Rob a bit later. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
I have the fondest memory of my loser parents having a black and white TV with, rabbit ears, and Scott Tyler lived down the street. His father had an Edsel in the garage. And they had a cool TV, so I ended up watching Super Bowl I as Max McGee came to the rescue against the Chiefs, Packers-Chiefs, a few years ago. I didn't realize this, Paul. 51 million people tuned into Super Bowl I. I had no idea.
Well, it was on 2 networks now, remember that?
It was on 2 networks because of AFL, AFC, NFC, whatever. And the answer, Paul, is the model here is 100 to 150 million.
Yeah, it's the biggest every year, and it's a huge advertising event as well.
The pixie dust is still there.
It's still there. And,
can they stop using Roman numerals? I don't know. What is XVI?
Oh, please, John.
What?
John, it's Bloomberg surveillance.
You went to a Catholic school, John. You should know this stuff. Latin,
Exactly.
Roman stuff. I don't know.
Said. I got it. The Los Angeles Times, and shout out to the Times with their coverage of the fire. They lead with why the Chiefs-Eagles Super Bowl rematch could deliver a ratings record for Fox, and it's Taylor getting smoochy face with a guy on the Chiefs. There's no quarterback throwing the ball. It's Taylor and what's his name?
Sure.
Smoochy face. I mean, that's really what this has come down to, right?
It's no Max McGee, man.
Max McGee and Paul Horning folks were suspended because they were out drinking the night before.
That's right. McGee wasn't even supposed to play that game.
Yeah.
But somehow
Horning they had to let play. He was a star. Max was lucky he was on the team. Maybe somebody on the Eagles will be out all night drinking. That's a good sign. We're gonna have a lot of fun with this, and we hope you do too as we get to Sunday here. Lions Bills is what we had lined up, and Michael Barr and I went down in flames, to say the least. On a Jobs Day, what's important are these revisions. Got a lot of experts. Anna Wong will interpret that after the jobs report. We're really privileged to have her this morning. Futures up to Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Pretty much dead flat as far as equities ahead of the jobs number. AI cloud crowd. Amazon, among the most active in the pre-market trading, warning investors it could face capacity constraints in the cloud computing division. Down this morning, pre-market among the most active, about 3%. You'll recall, like last week, Microsoft said the cloud sales growth was hurt because it didn't have enough data centers to handle demand for its AI products. And, of course, non-farm payrolls, 8:30 Wall Street time. Look to the revisions. Headline number expected to be about 175,000 jobs created. First report for 2025. And according to a report from Autosport, Netflix considering a bid for Formula One broadcasting rights in the U.S., potentially challenging ESPN's current arrangement. So stay tuned for that one. Finally, Starbucks customers starting to see messages scrawled with Sharpie wishing folks a great weekend, or simply saying enjoy. The chain rolling out with the new policy, hoping the notes or the little doodles are a better way to connect with customers. Workers have concerns. Some believe it's going to slow down service. Did you see the message I wrote on your coffee cup this morning? We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
And are they going to do away with mobile orders? I mean,
no, that's got to be a huge part of the business.
That's got to be a huge part of the business.
I pull into my Starbucks, and it's 20-car line.
Yeah.
I don't know how long that takes. I walk into the store.
In Europe,
it's empty.
It's the same way,
I got
frankly.
my coffee in a minute.
My daughter did it. She lasted about a year. It was just like she needed to go through therapy after doing the drive-in at Starbucks. It was just like a nightmare.
Yeah.
For those of you not on Global Wall Street on this jobs day, I got to explain this to you. You'll hear me talk every once in a while about a guy who's been very kind to me up in Connecticut. His name is Frank J. Fabozzi. And it's a running joke in the industry, except it's not funny. Everyone must read Fabozzi. his take of bringing the calculus, the dynamics of mathematics over to fixed income is absolutely original. He opens windows for you. I love him because he uses the old notation of calculus versus the new hip stuff that Priya Misra is well versed in. And Priya, when joining us now from JP Morgan, has the ultimate accolade that somewhere in the vicinity of 2,000 pages is a Priya Misra chapter is with Frank Fabozzi.
Hi,
is
Tom.
that right? How did this come about? Did he call up Jamie Dimon and have a tantrum and say, I need Misra? What an honor. How did that happen?
It was a long time ago. I worked at Lehman Brothers at that time.
Do you
in the
remember that?
research
Yes.
team. Unfortunately, it was there until the bankruptcy, but this was well before the bankruptcy. We had a very solid research team, if I may say so myself.
Yes.
And, Mr. Fabozzi reached out and wanted a chapter on tips, which was a very novel product at that point.
Yeah.
And I was the research coverage.
That's outstanding. Nice. That's outstanding. I lie. I say I've read Fabozzi, but I haven't read it cover to cover. It's like 2,000 pages. Then on tips.
Yeah.
The 10-year, I'm looking at it twice now in the last 2 days, under 1.99%. Does it signal the disinflation you and Bob Michael talk about?
It does. It also signals that the market has repriced real rates significantly, meaning value has been created in the bond market. So I love that you look at tips because that's ultimately what drives, I would argue, the economy is with the level of real rates, meaning can I pay my mortgage in terms of if I'm earning more, I can pay a higher rate, which is the idea of nominal rates. But if real rates have risen, they were negative. They were zero for a long period of time post-financial crisis. And now they've repriced closer to 2%. There's a huge debate. What is R star, which is actually a real concept? Is it closer to 1%, which is where the Fed is? I'm maybe more in that camp, but we don't know. But the market's pricing in over 2%. And this is why I think fixed income has so much value. You're getting that real income.
Paul wants to get in here. I got to ask this question and get out of the way. Money question. If rates now are normal, can America prosper? You're sitting with Mr. Dimon, Mr. Pinto and the rest at JP Morgan Senior Management. Can America prosper with a new rate regime at these levels, a real rate regime?
I think so, yes. I do think that if, it provides you, I think now fixed income is providing you income. It's also providing you diversification. So this idea of having a balanced portfolio makes a lot of sense now because rates are not at zero, in which case there's limited room for rates to fall. If we're running at 4.5, and what if you get, and we've seen this in the last month, you had the deep seek sell-off, you had some weaker data with JOLTS where risk assets struggled and bonds made sense. High quality fixed income is giving you income, it's giving you diversification. And so I think, yes, America can prosper, but in a balanced way. I think when cost of capital is high, dispersion is going to be higher. There'll be a lot more winners and losers.
We were just talking to Jim Bianco earlier today, and we were talking about sticky inflation, but still a pretty solid job market. You have that kind of environment, one could argue the Fed doesn't need to do anything. And maybe if they wait long enough, the discussion then becomes, when do they raise rates? How do you think this Fed is going to kind of move over the next 6 months?
So the Fed, I would argue, has done the easier 100 basis points. They have recalibrated, which is why policy was very restrictive 6 months ago. It's less restrictive today. Now, the Fed believes policy is still restrictive. I agree with them. But it's not just about monetary policy. If you get significant fiscal stimulus or maybe deregulation or something that actually gives another boost to the economy, they may not have to cut rates. On inflation, I did want to highlight, I think the Fed has stopped, or the recalibration for now is over, because they are worried about inflationary risks. Our view is you look at 3 months, 6 month moving average of CPI, PCE, it is heading close to 2%. Mm-hmm. It's sticky, it's going down not as fast as the Fed would like, but it is, in our view, continuing to head lower. Okay. So I think if inflation gets closer to 2%, they can cut 1 or 2 more times.
Cut 1 or 2 more times. Okay, and with that kind of scenario here, how much credit risk do you think investors should be taking in this world? The economy seems pretty strong. Earnings are okay, I guess. So can we, in fact, take some credit risk?
Yes, I think you have to be careful where are you taking that credit risk, which sector, which part of, I would say even high yield investment grade, there's value across credit risk. Now, what I'm sure your next question would have been, but spreads are tight.
Yep.
They're tight, but they're tight for good reason. Balance sheets are strong. Look at all-in yields. You're getting 5.5%, 6.5%. So there is value in credit risk.
What are you learning from Michael Feroli right now? You've got to go. She actually speaks to The Economist, unlike Michael.
Okay.
What are you learning from Feroli right now about the labor economy and the U.S. economy folded into what your belief is?
So Mike and other economists will tell you that the labor market is solid, but there are a few cracks under the surface. And we're watching, are those cracks deepening? Meaning it's a narrow labor market where growth is, it's a couple of sectors. The JOLTS data suggested that job openings are slowing. Now, we've got a lot of policy issues, there's uncertainty. So I think what we're watching from economists, and I rely a lot on them, is the totality of the labor market, right? From hirings are slowing, but firings are also very low. So it's a solid labor market. Today is just going to be one report, and I would say the January report is often the hardest to forecast because of seasonal adjustments.
Fair, but how can... We got to run you. Can you stay longer? We got the Secretary of Treasury. We'll move him aside. Priya Misra, this is important. How can rates come down if I got 3% Atlanta GDP now, if I got nominal GDP of 4.8 or 5%? I just don't get it.
Well, they can come down because there's a lot of money sitting on the sidelines.
Fair.
People have been underinvested in fixed income. The yield curve is finally upward sloping. You're earning more, taking a little bit of duration risk. It's maybe some credit risk. If you're getting 5.5%, 6%, that money that's earning 4% in cash starts to
Okay, so
out.
John Tucker this weekend in his 201k, should he go from the 3-year CD, 2-year CD, out to the 5-year CD?
Yes. It'll give him more income, and it's diversification. What if you have something? We've had
a CD is diversification?
It's going, if it's 3 year. Longer duration helps as a hedge.
Priya, thank you so much. And I'll go back and look at the handbook of fixed income securities, Mr. Fabosi, and look for the Misra chapter from a few years ago. Red and green on the screen. The VIX, Paul, the VIX, a week ago Monday, 2 weeks ago Monday,
20.
we were popping 21.22. 15.33.
Yeah, the market feels pretty common here at this moment. We'll see what happens at 8:30 when we get that jobs number.
2.02% on the 10-year real yield. That's what I'll be watching. That and that Sweeney yield, the 2-year yield, as well, when we get the jobs day here in less than 1 hour. Ellen Zentner, Claudia Sahm will be with us with a good cast of worthies here to give you an interpretation. Again, Anna Wong, who's been just brilliant on the American labor economy. She'll have time. We wanted to get her on early, but her people said she's got to interpret the data. Okay. So Dr. Wong will be with us afterwards so she can seriously massage the revisions, which is what we need. What do you serve at Super Bowl? The Sweeney House. What are you serving for Super Bowl?
I'll be...
Guac?
Yeah, I'll be on a plane.
Tariff guac?
Yeah.
Cheetos. Yeah, Cheetos are good. I like that. I think I need a bag of Cheetos to get through it. Stay with us on his Super Bowl Friday and Jobs Day. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You mentioned it, Paul. Amazon now among the most actively traded pre-market. Those shares down 2.8%. Well, Bloomberg Economics expecting a solid hiring print for the jobs report for January. The focus is going to be on the large contrasting revisions to the establishment as well as the household surveys. Again, 8:30 Wall Street time. And ahead of that, futures, Dow futures up 33 points. S&P E-mini futures dead flat. The NASDAQ futures down only 7 points. 2-year yield, 2 basis points higher, 423. The 10 unchanged at 444. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Tom and Paul.
Thanks so much, John Tucker. Greatly appreciate it. Paul Sweeney and Tom Keene within 1 hour of the jobs report. We're going to try to get in one more thing on equities here. This is written up. Caroline and I did a great job on this in technology yesterday. Anurag, I got to rip up the script. Forget about Amazon. I got to go to the headline. Tech giant Workday lays off 1,750 employees and shift to AI. Is this Paul Sweeney and Tom Keene and John Tucker's future?
No, not at all. I know Workday has laid off some people, but I don't think it has to do with AI. The really what happening is when you look at most companies, the headcount growth on the white collar area is not as much. So what's happening is for Workday, the seat count growth is not getting there. But that doesn't mean that they're not growing. They're still going to grow subscription sales north of 15%. So one of the things the company did last year was change their focus to talk about 17, 18% growth rate on the top line to around 15% with a lot of margin expansion. So what you're seeing right now is basically they are giving margin back to the investors.
So Amazon last night, Anurag, it kind of sounds a little bit similar to Microsoft saying that they can't keep up with the demand for their AI products. Can you explain what we're seeing in the industry? What are the constraints?
This is really a rush towards doing land grab right now. You gotta have the infrastructure ready when clients want to deploy more of the products. So one of the things that you will see is companies are experimenting with AI. So they are starting with a small project, then they are expanding it, but they need an infrastructure around it. This is something that we have been saying for several years, that the best way to do that is on a cloud infrastructure rather than doing it in-house, because first of all, it's scalable, it's cheaper, and more importantly, the cost for you is variable. You're not going to be able to come up with buying those AI servers and GPUs in-house yourself. You just go and rent it out. So that's what everybody is doing right now, ensuring that they don't get left behind when you see a surge of demand coming in.
So how do you stack up kind of the competitive landscape for AI? I'm thinking of the big players, Amazon, Microsoft, Google. How is it shaping up here?
Yeah, let's talk about the 4 companies for sure. Microsoft absolutely in the lead, but that is because of the ChatGPT and OpenAI relationship. Bulk of the revenue that they are generating is from consumer apps. For the other 3 companies, which is Google, Amazon, and even Meta, they don't have consumers app that they can monetize that way. Meta actually doesn't even have a cloud business, so we don't know how they're going to monetize it. So let's look at Google and Amazon. Bulk of their AI revenue is going to come from enterprises, and enterprises are slow in embracing it. And even if they have created an application, the contribution to the bottom line of cloud is very small compared to a consumer app. So all 3 are working with enterprises. Microsoft has the luxury of getting all the tokens when you are searching on ChatGPT on your phone.
On this jobs day, commercial free within this half hour. We'll do the same at 8:30 as well. Michael McKee scheduled to be with us on the confusion of the revisions. Michael Barr will darken the door. And also a bit of the Secretary of Treasury conversation from yesterday. Right now we do better with Anurag Rana of Bloomberg Intelligence. Anurag, if you need to do a log linear extrapolation of the Anurag Rana world down the income statement, which line correlates most with your future guess of what these AI giants will do? Is it operating income? Is it EBITDA? Is it free cash flow? Or is it just simply revenues?
Yeah, so this 2025 is going to be a year of capital expenditure and margin compression. When you look at somebody like an AWS, for example, they improved their margins in 2024 by 10 percentage points. So in 23, the operating margin was 27%, and in 24, it was 37%. That's a big jump for AWS. And now next year, we think it's going to compress at least by 100 to 200 basis points, if not more, because of the investments. Longer term, this is one of the most amazing business models of all times. You can see margins north of 40%, but for at least for the near term, we're going to see compression. So that's the most important KPI right now. In terms of the cloud growth rate, as supply comes into online, we should see cloud growth rate improve, but most likely in the second half of this year.
Hey, Anurag, one of the, themes of the last quarter or so is these big tech companies just ramping up their CapEx like materially, not just $1 billion here or $1 billion there, but tens of billions. Do we like that?
See, again, depends on your time horizon. If you're going to trade till the Super Bowl, but perhaps not. But when you think about these business model in the long run, you really are creating such a massive moat around these businesses with high fixed costs right now. But at the end of the day, these have very strong unit economics that once you get up to scale, you will see a lot of that fall to the bottom line. And that creates a bigger barrier for somebody to break into this market.
The thing about Anurag Rana, it's great. I mean, you look at his energy, you look at all that's going on out there. The whole slang thing that Lisa's talking about. I mean, he's high energy. I mean, he's like, there's like slang within tech for these people that are high strung and wound up and all that. That's Anurag Rana. Anurag, thank you. I learned a lot there. Really, really, really good. Appreciate it. Anurag Rana on the cloud with Bloomberg Intelligence. Let's get right to it with the news. 45 minutes to the jobs report. In New York City, here's Michael Barr.
Thank you very much, Tom, Paul, John. A federal judge has blocked President Trump's plan to eliminate 10% of the federal workforce through a so-called buyout. Bloomberg's Amy Morris reports from Washington.
It isn't really a buyout. It's called a deferred resignation. But hours before the midnight deadline for workers to apply, the judge sided with several labor unions that had requested a temporary restraining order until Monday. Democratic Senator Mark Warner of Virginia applauds the delay.
I don't believe it's been funded. I don't believe Donald Trump has any history of ever paying his bills. And I fear that federal employees may be marked for riffing, potentially without any compensation.
The administration says as many as 60,000 government workers have accepted the offer to resign with the promise of being paid their regular salary through September. In Washington, Amy Morris, Bloomberg Radio.
Authorities are searching part of Alaska's western coast for an aircraft that went missing while carrying 10 people. The Bering Air flight went missing yesterday while heading to Nome with 9 passengers and a pilot. The NTSB briefed lawmakers behind closed doors on the deadly plane and Black Hawk helicopter crash in Washington. Senator Ted Cruz saying that helicopter had turned off a crucial safety system.
The Black Hawk had a transponder, so it would appear on radar, but ADS-B out is significantly more accurate.
The system, the Automatic Dependent Surveillance Broadcast, or ADS-B, tracks the location of aircraft by GPS, showing altitude and ground speed, as well as where other aircraft are around them. Experts say it is significantly more accurate than radar. Here comes another round of winter weather. A winter storm watch is in play for Saturday night into Sunday. It will organize across the plains and the Ohio Valley. New York City could see a coating to 2 inches of snow. The New York metro area, northern New Jersey and Long Island, 2 to 4. North of the city could see 4 to 8 inches. Boston could get up to 9 inches. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Man, weather for the Super Bowl, it's a bit tough. You know, people move around.
Yeah.
We'll
but they'll be fine down in New Orleans.
Yeah,
they'll be fine.
It'll be great.
John Tucker, are you going to New Orleans? Are you surveillance coverage there?
No, I'm preparing for the storm. First stop will be the liquor store.
Yes, get the essentials.
Storm preparation. Essential, yes, sir.
Very good.
That's how you do it in Jersey.
Thank you. We welcome all of you on Jobs Day. We're less than 45 minutes away. Lots of interesting data, but also the backdrop of what's going on in Washington. Soleil Motion covers Treasury for Bloomberg, and of course an acclaimed book here in the last 18 months or so. She had one of the first interviews here with the Secretary of the Treasury, the 79th Secretary of the Treasury. Mr. Besson is really quite something. Not only has he donated years ago to Al Gore and Hillary Clinton, but stepped up his fundraising and support for President Trump here in recent years. In a conversation with the Secretary of Treasury, Soleil Motion.
These are Treasury employees. It is 2 Treasury employees, one of whom I personally interviewed in his final round. There is no tinkering with the system. They are on read-only. They are looking, they can make no changes. It is an operational program to suggest improvement. So we make 1.3 billion payments a year, and this is 2 employees who are working with a group of long-standing employees.
The letter that the Treasury Department sent earlier this week talked about how the team currently does not have access to change the system. Have they at any point this year had the ability to make changes?
Absolutely not. This is no different than you would have at a private company. And by the way, the ability to change the system sits over at the Federal Reserve. So it doesn't even lie in this building. So they could make suggestions on how to change the system, but we don't even run the system.
And if they ask for, if they request the ability to change the system, would you grant that?
No, again, they have no ability to change the system. I have no ability to grant that change. That they can make suggestions, then it would go to the Federal Reserve, and just like any large ERP system, there would be tests, there would be this, there would be that, and then the Fed will determine whether these changes are robust or not.
As the Secretary of Treasury, you also oversee the IRS. Do you know what kind of access the team has to IRS data or individual taxpayer data?
Well, I'm glad you asked that too, because look, the IRS, the privacy issue is one of the biggest issues. And over the past 4 years, we've seen a lot of leaks out of there. The IRS systems are quite poor. When I started in college in 1980, I learned to program in COBOL. I think there are 12 different systems at the IRS that still run on COBOL, but as of now, there is no engagement at the IRS.
And if they request that access, would you sign off on that request?
They haven't, so we'll take that when it comes to it. I think there is a lot to do there, but the president was elected with a big agenda, and to the extent that getting the IRS in better shape is part of that, sure. Because look, with the IRS, what am I concerned about? I am concerned about collections, I'm concerned about privacy, and I'm concerned that the system is robust.
The Secretary of Treasury, Scott Bessent, in conversation with Saleem Mohsen there, really a good first interview and hugely picked up. And Paul, the major takeaway there was the observation of what rates will do versus microanalysis of the Fed.
Right.
And a number, Ed Yardeni published on, the bond vigilantes should pay attention to.
Yep.
Secretary of Treasury. We were talking to Roman numerals. John Tucker helping us out with Roman numeral knowledge of Super Bowl. And of course, I mentioned Max McGee earlier in Super Bowl I because that's the only Roman numeral I could pick out. There was Roman numeral XXXII, and then 1 year later, Roman numeral XXXIII, and then Roman numeral L, which was 2015 for the dreaded Denver Broncos. Do you pay attention to the Super Bowl, Michael McKee, or do you just say, I got to wait for the Broncos to get their act together?
I'll pay some attention to it, but in this case, I don't really have a dog in the fight, so,
I'm going to watch the commercials, literally. I mean, Paul, the commercials are a big deal, right?
Oh, yeah, it's all part of the whole thing. And it's if you're spending $8 million for a 30-second spot, that's just to get the airtime.
Yeah.
Forget about the production value of creating the ad. So you're making a big investment.
We may have an 8 million revision here coming up with the jobs report in half an hour. What do you think, Mike McKee? How odd is this January report?
Well, there's two things. One is that the January report will not itself not be odd, but the government once a year revises past data to make it more accurate because they get more data that comes in from other sources. Yeah. And so you're going to see some major changes. The biggest thing that you'll notice is that the household survey in terms of the size of the labor force, how many get employed and how many are unemployed, those numbers are going to change drastically because the government updates the numbers based on new census figures in terms of the population size.
Right.
And they do not revise the past. So the change from December to January is going to be huge, but it's irrelevant.
Okay,
so
but, well, you said it's
can't pay
irrelevant,
attention
but
to it.
Brookings did a great job on this with some wonderful charts, which really brought to me the immigrant effect. What's the Mike McKee immigrant effect that we see in 35 minutes?
Well, a lot of this is going to be the immigrant effect because the government had trouble tracking the number of people who came across the border during the surge in 23 and 24, early 24. And those people mostly came into the labor force. And so that's going to change the dynamic of how you figure out the labor force. Now, all of these are levels that are going to change. So there is a feeling that the unemployment rate won't change. It could change a little bit, a tenth or two in either direction. And in that case, probably the Fed will just look through it.
That's kind of where I wanted to go because I'm just a headline person. I let you dig into the weeds here. So I just look at the unemployment rate of 4.1%. If I'm the Fed, they have to be comfortable with that, I would think. Is there a number where they get uncomfortable?
You could be on the Fed, Paul, because basically that's what they all say too. Is, given all the volatility we've seen in all kinds of data, that they're basically just watching the unemployment rate. Okay. And if the unemployment rate goes down by maybe 0.3 or more, they would start thinking about maybe we have to raise rates. Yep. They wouldn't necessarily do it right away.
In the McKee hat, are you modeling a sub 4% unemployment rate?
No. Because I was about to say that if the unemployment rate starts to rise, which is perhaps more likely, then the Fed might go back to cutting bias.
Come on. There's nobody listening today. Lisa's on a plane to Berlin and Pantera. Help us here. Where's the 4.x number where things change?
Most Fed officials have said 4.5 is their kind of upper limit. And it depends on other data that would support that. For example, if we see unemployment rise and consumer spending start to slow, then they have concerns and they would get back to a cutting bias.
Are you going to Boston Monday night for the Beanpot?
No, I'd love to. I'm going to Washington.
BCBU.
For Tuesday morning's Jay Powell testimony.
Oh, come on. The Beanpot's way more important.
I would agree, but for some reason the managers here think that people are interested in Powell.
It's fabulous. Describe for our national audience. You're standing there with a bunch of 23-year-olds. They're all 6'6", 200 pounds, except for one small guy who's going to make more than all the rest combined. What's the Beanpot like?
The Beanpot is very exciting because you have all these major colleges located in Boston who are super rivals in hockey, and so it's comparable, if you've been in New York and you go to the Big East tournament, especially during the glory days when the Big East was all concentrated. Yeah. Well, Georgetown, Syracuse, St. John's, and Villanova, all reasonably close to each other. So you'd have all the fan bases there. We used to have a reporter at our Boston radio station, who shall remain nameless, who's she had two brothers and her father, and one went to Northeastern, one went to Boston College,
very cool.
One went to BU. And I said, what does that leave you with, Harvard?
Yeah.
You got to choose.
And Harvard's it's not like Billy Cleary. I mean, they're not like 18-0 anymore, are they?
No. Northeastern's come up a lot.
I mean, the ECAC and the Big East and stuff I don't understand.
Yeah. Philadelphia has a similar thing for basketball. Big Five basketball.
Big Five, yeah.
Villanova, St. Joe's, LaSalle, Drexel. And they play at the Palestra, which they've been playing there for hundreds of years. Great rivalries.
Did you see the story in the George Hallis's widow just died at 102 years old? When she was in her 20s, her father sent her to Drexel to work in the athletic department because their uncle was the athletic director, so she could learn about sports, so she could help with the team.
Michael McKee, thank you so much. Michael McKee and all there on the Beanpot. Good morning, 92.9 Boston. We're brought to you by IBKR. Will the percentage of the U.S. experiencing drought conditions exceed 18% on February 18th? At IBKR Forecast Trader, the yes was recently 35%. What's your take? Trade your prediction at ibkr.com/forecast. IBKR out with the futures. Will Taylor kiss the tight end of the Chiefs Sunday?
Has been here the whole time. If you could see that I'm the one who
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Lisa Mateo on assignment to Berlin in a Pantera concert. John Tucker in for us today. 29 minutes from Jobs Day. Lots going on. The usual lineup. Dr. Sahm will join us near the 8:30 mark. Claudia Sahm of New Century Advisors. Ellen Zentner will be with us. And then because of the turmoil that we see, and particularly folding in currency, Rebecca Patterson will be with us after the jobs report. Kristina Campmany. It's just lights out lineup here for the 8 o'clock hour. None of that matters because Sarah Hunt's with us, and we'll get to the equity markets and the impact off this economic data and what it means for the stock market. We'll do that in a moment. Busy day. What's your observation, Paul? Besides McKee was lights out in the bean pot.
He brings it at the bean pot reporting. We appreciate that. So 8:30, Tom, would be interesting to see the unemployment rate. I'd be interested to see average hourly earnings.
Yeah, thank you.
Hopefully earnings are keeping up, wages are keeping up ahead of inflation.
Ahead of inflation. Yep. So the real wage goes up, and Sarah Hunt is happy. We'll get to that in a moment. Right now, with the Interactive Brokers Bloomberg Business Flash, John Tucker.
All right, thanks, guys. Pretty much dead flat for the major equity indices right now. The Dow futures up 15, S&P E-mini futures down a point, NASDAQ futures down 8 points. And jobs report, 30 minutes. Economists surveyed by Bloomberg expecting 175,000 new jobs. The whispered number, 199,000. That's a WHIS on your Bloomberg terminal.
Nailed that.
Right? Okay.
Yes, sir. Yes, sir.
Amazon, among the most actively traded in the pre-market, reporting better than expected revenue and profits for the holiday shopping period. The stock down pre-market due to disappointing guidance for the current quarter. Right now, Amazon shares ahead of the cash open on Wall Street down 2.7%. Some of the other stocks on the move of interest, Pinterest of interest, jumping after the social networking company reported fourth quarter results. They beat key expectations, also giving the outlook stronger than the consensus. Then you have Expedia shares. They're rallying at the online travel agency reported fourth quarter results that beat expectations. Company also restating its quarterly dividend. The yields right now ahead of the 8:30 jobs report, 2-year, which is more policy reactive, up 2 basis points. That's at 422. The 10-year unchanged, 443. You know, no tariffs had been announced, at least on the European partners so far. Still, Prosecco importers and distributors have been front-running this, taking precautionary measures to protect the market. U.S. imports of Italian sparkling wine skyrocketed by 41%. Top-selling Italian wine.
Did K&D Wines call you to do that research up on, not that I'd have a nodding acquaintance.
I will be, after I leave
K&D
today,
Wines?
I will be doing some research.
Okay.
On Prosecco.
Lots of research as the storm hits the Jersey Shore tonight.
They told me at
night.
K&D Wines up on Madison Avenue, they said Prosecco sales are through the moon.
Yeah.
I don't think I've ever had it. Sparkling wine?
It's a champagne equivalent for
It's a
Italy.
champagne. Yeah, champagne can only be from Champagne east of Paris.
Can you sparkle Pinot Noir?
You can sparkle, for you, John, you could sparkle MD 2020.
That's
I
right.
could
Got it.
see it right now. John Tucker, thanks so much. This is a really important conversation because Sarah Hunt can fold in her economics from Wesleyan into the courage to be in the market. I want you to talk on this Jobs Day to people scared stiff. How do they get into equity markets?
Well, I think there are a lot of areas where the valuations are not as challenging as the Mag 7 have been, and even the Mag 7 valuations have come down. And I think that what you're seeing now is a sort of recalibration on, we still have a lot of demand, we don't have enough capacity in a lot of sense on the AI space, but some of these big cap stocks that were looking very punchy are looking a little less punchy right now, and I think that
What
that
does
gives you some
punchy
room.
mean?
High valuation. Punchy.
It's CFA level
Yep,
4.
I know,
Paul,
exactly.
I can't keep up.
So, Sarah, is 2025 going to be a year where this market broadens out a little bit away from the Mag 7? We've been waiting for that, thinking that that's generally a good thing for the health of the market. Are we going to see that this year?
I think that's going to depend a lot on what happens to the economy, and I think we're going to get some information today, although it's going to be some information that's being revised, so it's going to be a bit messy.
Right.
But I think that as we go forward, as long as earnings are looking pretty good, and right now they're not blowing the doors off, but they're looking pretty good, and companies are saying pretty good things. I mean, the CapEx side is still going very strong, and I think that when the DeepSeek thing, which was a week ago and seems like 6 months ago now, but when that came out, I think people were worried about CapEx.
Let me do it with you. I didn't do it with Anurag because I was talking about Workday laying off because AI is going to, they're going to, whatever that is. Anurag said that angle's nuts. Paul mentioned this. 2 companies, they had moldy AI outlook because business is too good.
Well,
when is that a bad thing?
So business is too good because I don't have enough capacity. If I have overcapacity and my demand is waning, I have a problem. If my demand is strong and my capacity is not there, I don't have a problem yet. So I think that there was such concern about this, and I honestly think that it's overdone to some extent, but there's been a bit of a reset because of the DeepSeek stuff.
And DeepSeek was, 2 weeks ago, tariffs, or a month or so. I mean, there's a lot of noise out there. How do you suggest to your clients that do they look through it? Do they try to take it into account, what they're looking for in terms of value and valuation?
Well, I think that right now there's a lot of uncertainty, right? And that sort of seems like that's going to be the buzzword for the next several years is uncertainty. But I think that you have to have a longer term picture, and a lot of this thematic investing doesn't go away. We still need power. We still need all the ancillary things that go along with building data centers. This idea that all of a sudden we can use something that's a little bit less powerful, we need it to be less energy usage.
I want you, how many stocks do you have in a portfolio typically?
Somewhere between 35 and 40.
Okay, beautiful. You get 35 stocks. It's like the Fidelity 50 fund and John Mayer so years ago. You get 35 stocks in a fund, and X number of them are not doing anything for a month or 3 months or 9 months, and yet a pro like you holds them where everybody else sells them. Explain how you manage what you believe is a winner when it's doing nothing.
So this does happen, as is clear through the market, and what we're looking for is stocks that have a catalyst. And if that catalyst is still on the horizon and and the story hasn't changed so much that there is no catalyst, then you can hold on and say, I still expect X to happen, and when X happens, it's going to be beneficial. If you have to look at those stories all the time, and you have to say, do I still have a catalyst? Is my balance sheet good? Is my cash flow good? Is this just something that there's a dislocation in the market for the time being, or did things get so far ahead of itself and I've made some nice money in this and I can wait it out because I'm sitting with a dividend yield, or I'm sitting with a company that's buying back its stock, and I can wait for the other things to materialize. If you don't see a catalyst on the horizon, that's when you have to start saying, do I call this position because the thesis is not playing out as I expected it to.
Are you overweight technology at the moment?
I would say that we're closer to equal weight, and in some cases lightly underweight.
Okay. Where would you put some of the non-tech investments? Where are areas that you like? Is it financials? Is it healthcare?
So you see some financials, you see some healthcare, you see some energy, which the S&P is still, it's a very small part of the S&P, but I would say we were overweight energy. I've talked about that before. Yep. I think that thesis is finally starting to play out, and I think that you're going to start to see some of that ancillary, the LNG, all those markets are doing better than they had been doing before, and people are starting to recognize that they need to be part of the energy superstructure for the next decades to come.
So it's interesting. I mean, as we go through earnings here, it kind of brings back to the fore valuation for this market. And, I've heard so many different ways to think about it. Do you pull the Mag 7 out and look at the 493? How do you guys think about valuation of the market, or do you not even think about valuation of the market?
It depends on what kind of strategy you're looking for and what you're following. If you look at some of the software names, those are dragging up that PE ratio for the market itself because there's very high PEs in that software sector. In some other sectors, your PEs are much more unchallenging. Look at some of the staples right now. Look at some of the ingredient companies right now are trading at 13, 14 times. We haven't seen those kind of multiples in other parts of the market in the last couple of years. So I think that there is some room across there to look, and then you have to just, again, look at those technology stocks and say, do I have a moat? Do I have something that allows me to keep going regardless of what's happening underneath? And that's where the software companies are getting those valuations.
I guess just one more question on jobs that we got to get back to the economics of the moment. Do you see any sense within the companies you follow that the labor market is cracking?
I don't see that now. I do see more layoff announcements than you would like to see without feeling like there's big hiring announcements. But at the same time, that's a little bit, that's the kind of like anecdotal data that is hard to put into a framework until it starts to become a cascade. I don't think you're seeing that yet. And I think it's very important on what those numbers are going to be on wages, right? Because that's going to tell you what the dynamic is, regardless of what the numbers, because the numbers are going to move around a lot.
Thank you, Sarah Hunt. Great brief. Really, really appreciate it. I love doing equities in the jobs hour.
Yeah,
because that's really what it's about, is what it's going to mean for the markets here. Futures a little bit weak. Let's fractionally, there's a numbness to the tape you're waiting. Futures -4, Dow futures -7. Claudia Sahm coming up, and Ellen Zentner, among others. Rebecca Patterson will be with us here in the vicinity of 8:45, I should say, as well, here at 8:10 Wall Street time. We're really going to begin to drill in here. We can do this with EY Parthenon and their senior U.S. economist, Lydia Bassour. Lydia, I have to start that you went to one of the rock star schools in the Western civilization, Paris Dauphine. What was it like going to PSL in Paris to do economics?
It was great. It was a great program. I had a great time. Great teachers and just overall a great experience.
It's just a really important, they really capture the mood here and the international sense of it. Do you believe, Lydia, coming off of Rue Dauphine in Paris, do you believe in American exceptionalism in a job market that will keep up with American exceptionalism?
Yeah, that's an important theme for this year. We've seen a very strong economy. We're coming off another year of strong growth. And a part of it is really what we're saying on the productivity front. We got the data yesterday, which showed that productivity cooled a little bit, but we're still on that strong trend. And if you look at, the trend in productivity over the past few quarters and the past 2 years, we've seen a revival that's similar to what we had seen back in the early 2000s. So, when you put that into the broader context of the U.S. economy, we've seen inflation come down. We have an economy that showed resilience, and part of that is thanks to that productivity gain that has allowed for that non-inflationary growth to happen.
So, Lydia, how are you approaching today's jobs report? What will you be looking for?
Yeah, so, this morning's jobs report is going to be a very noisy one. There's going to be a lot to unpack. I think, first of all, we're going to get the January jobs numbers. So we're expecting to see a 190,000 job gain and the unemployment rate remaining steady. But there is a lot of different moving parts and different influences on the report. On the downside, you have the wildfire and you have, the cold weather that are likely to put a drag on the numbers. But at the same time, January is a very strong month historically. You have strong seasonal factors. You're basically trying to neutralize those post-holiday layoffs. So you're likely to have that upward bias from the seasonal factors as well. So a lot of moving parts. And then you have the revisions, of course, which are going to be quite interesting.
Well, Paul, this is a great question because you got a whisper number north of 175, right?
We're right at 200,000 right now.
Lydia Bassour, when we were 5 days ago, 2 days ago, we were at 190, whatever. Lydia Bassour, are we ready for a 200,000 print on the jobs report? I don't think the street is.
If you look at, last year, the year before, very strong upside surprise. I think, given all the things we've talked about, given the revisions, given the seasonal factors and all the noise, I think it will be, taken with a grain of salt, and some of that strength will likely overstate the strength of the labor market. If you look at the overall picture, we're still in a solid labor market. We have the unemployment rate at 4.1%, but we've been in a cooling trend. And if you look at, the totality of labor market indicators, we got the JOLTS data earlier this week. They show that we're still, in that cooling trend.
Paul, we got to get a countdown clock for radio. I haven't figured out how to do that yet.
Exactly.
We got a countdown clock on YouTube.
Yeah.
Farrah's got a countdown clock going on TV. We need a countdown clock.
All right.
On Bloomberg 11308.
Do you want me to do it? 15, 14.
Yeah, Tom can do it for us.
That's how we'll do it. Okay, Paul.
Hey, Lydia, given this labor backdrop here, what's your view of the U.S. consumer here? How steady is the U.S. consumer?
Yeah, we've seen a lot of resilience from the consumer. Looking at consumer spending momentum heading into this year, we do expect to see some moderation in consumer spending trends, and that's because, as we said, the labor market is in that gentle cool down, and that means some moderation in income growth and some moderation in consumer spending in the coming months. So I wouldn't be surprised to see much cooler consumer spending numbers at the beginning of the year.
One final question, Lydia. Ernst & Young is living this along with all the other consultancies out there. Is AI going to replace your job?
AI is going to be complementing a lot of jobs. We've done a lot of research on the economic impact of AI, and there is, a lot of potential in terms of, complementing jobs, and also we're going to see some job displacement, obviously, but a lot of potential in terms of job exposure around the labor market. There is, a lot of jobs that are going to be, exposed to this Gen AI augmentation. So yes, there's going to be a lot of moves in the labor market and a lot of reshuffling as Gen AI continues to ramp up.
And Lydia, this is where you end by saying, but we've researched this, and people that do the news from New York City, they're not going to be replaced, are they? I mean, it's not, Paul, it's not.
No risk.
It's not, no risk there. Zero risk. Lydia, this has been fabulous. Lydia Bassour, thank you so much with EY Parthenon there. Just wonderful. With red and green on the screen, the VIX 15.35. Joining us now, up to speed on AI with the news from New York City, the robot, Michael Barr.
Thank you. Thank you very much, Tom, Paul, and John. A federal judge has paused the Trump administration's buyout offer to more than 2 million federal employees. Many received an email with a choice to resign now and be paid through September, or run the risk of being laid off. Chanda Lauder, a mother of two who works for the Department of Veteran Affairs, took the offer, but now she says she's worried about what comes next.
We just don't know if we're getting paid, if we're not getting paid, if we're going to be working through September, if those who aren't taking it are going to be laid off.
Lauder is among 60,000 people who took the so-called buyout. A federal judge in Boston will consider a request from 18 states to block President Trump's executive order ending birthright citizenship. The hearing today comes after a federal judge in Seattle blocked the effort and cried what he described as Trump trying to change the Constitution with an executive order. Judge John Kuhnauer.
The Constitution is not something with which the government may play policy games.
President Trump outlined his tax priorities in a meeting with Republican lawmakers, including ending the carried interest tax break and expanding the state and local tax deduction. Trump also mentioned ending levies on tips, Social Security payments, and overtime pay. If you didn't get enough winter weather earlier this week, get ready for another round of snow. Bloomberg meteorologist Rob Carolyn has the latest.
Michael, the parade of winter storms here in February continues, with another one headed towards the Northeast and Mid-Atlantic this weekend. The Mid-Atlantic will see snow, sleet, and rain developing tomorrow. It'll change to rain. It's not as big a deal as it will be in the Northeast. We'll see kind of slippery conditions tomorrow afternoon in the Mid-Atlantic. It's tomorrow night and into Sunday that we have problems in New England and in the New York City area. Those areas are both under a winter storm watch Saturday night into Sunday. Both Boston and New York City could see 3 to 5 inches of snow, a little bit more in their suburbs. I'm Rob Carolyn, Bloomberg Radio.
Thank you, Rob. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Paul, I thought your observation earlier on real wage is really a big deal. And the answer is, I'm guessing that we will see continued inflation-adjusted wage growth.
Yeah, I think that's the play here, and it's something that's, we've had it now for several quarters, and that's a good thing. But the issue is, for a lot of folks, they don't feel it, because they're still paying crazy prices for certain things, whether it's eggs or other things in the supermarket. Prices have, for a lot of goods and services, have not come down in nominal terms. They're still at that higher level.
And I think I'm in the camp, we're still in the shadow of the pandemic, where it's a level change.
Yeah, it's a level change.
People are just comparing off 2019 or early 2020 and saying, that's my collective memory, although that's getting to be
Yeah, I don't know when that changes or how that changes. It goes for mortgage rates in the real estate market. People are waiting to get those cheap mortgage rates again, and what we're hearing from economists is unlikely to happen. This might be the new normal here.
I can't say enough about the work of Peter Orszag. He runs a small shop called Lazard, but does his research at Brookings. And earlier this year, they did a long study of this inflation, and it was the supply shock of the pandemic. It was just all of those shocks.
Yep.
They're coming along, and we'll get a little more data on that. We do that in 9 minutes here. And again, Paul and I are on the same page. We're really looking at the real wage here. And what we'll see, the unemployment rate to come in at 4.1%, unched is the report. I'm supposed to do a data check, folks, but I don't know. On YouTube right now, on radio across the nation, do we want to bore them with a data check? Because it's boring. What do you think,
boring.
Paul?
It's
Wait,
boring.
I'm the one who does these.
Yes.
What are you saying?
Sorry. Let's go right to Bitcoin. It's up 1%, 98,000, just under 98,000.
It's resilient. Seriously, it's resilient.
It's. I tell you, it's steady at this new higher level of 100,000, give or take. That seems to be the new post-Trump and post-ETF new level.
We're going to have to see here. We got the dollar, of course. We'll watch this. Seriously, I'm going to watch the 10-year real yield and the Sweeney 2-year nominal yield as well. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. Stocks and bonds, little changed ahead of the January jobs report out in just a few minutes. Economists surveyed by Bloomberg looking for the addition of 175,000 new jobs. Bunch of revisions, the yearly revisions. Pre-market trading NVIDIA shares right now, they're the most active. They are down about 0.2%, and Amazon shares down close to 3% ahead of the cash open. Growth is going to be lumpy because of capacity constraints in the cloud computing division. This is actually becoming a thing. You had Microsoft last week saying the cloud sales growth was hurt because it didn't have enough data centers to handle demand for its AI products. Porsche's profits going to slump to as low as 10% this year. Far from the 20% level floated before the IPO. The stock dropping to a new low since the IPO.
Wow.
Porsche, among the major automakers, they pulled back from transitioning to electric vehicles last year, citing underwhelming demand, especially heard in China. So, I don't know. Who wants an electric 911?
I never saw it.
Anyway, Dow futures down 17, S&P E-mini futures down 6, NASDAQ futures down 28. We check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that's your flash. Paul and Tom.
For those of you across the nation, across Canada on your commutes on Apple CarPlay, Android, we begin our coverage of the American Labor Reports, plural. We always start with Claudia Sahm, and thrilled she could be with us with New Century today. Dr. Sahm, I want to talk about immigration, one of the surveys, the household survey, and trying to guess the population of America. When you were at Michigan, how guessy is that?
Well, I mean, the Census Bureau has well-established methods for gauging the population, immigration, but they did recognize that because we'd had such a surge in immigration in recent years that those methods just weren't up to that, getting the most timely data. And so what we're going to see today are numbers folded in that reflect kind of a rethink of how to get those numbers better. And they'll be pretty big revisions, but it's a much more accurate picture of what the labor force has looked like in most recent years.
So, Claudia, how would you characterize this U.S. labor market? For a lot of folks, me included, I look at a 4.1% unemployment rate. It feels full employment. It feels like wages are healthy. Is that the fair assessment?
Broad brush. I mean, this is a very good labor market, and what's been very important in recent months is we've seen some more stability to it, right? So that the unemployment rate had been rising in the first half of last year, and then it leveled off, and it's kind of been bouncing around 4.1, 4.2%. That's a really good unemployment rate. That's a low unemployment rate, and it's relatively stable. And we've seen the same thing with the payroll gains. Yes, we needed moderation. No, we were not going to have the big post-pandemic big gains, but we needed it to kind of level out at a good place. And that's where we've been in recent months. And so that's been very encouraging. Right. Because that's what an expansion looks like, a full employment expansion.
Claudia, you were great at saying, okay, there's the Sahm rule and recession hysteria, but we never got there. You nailed that. Now I got an Atlanta GDP reducing solid economic growth as well. What is the growth backdrop of this jobs report?
Right. So the growth backdrop is strong. I think one thing, since we did talk about immigration, it's important to keep in mind that we are the trends are shifting and have already started to shift. It's been the rise in immigration was a real push on supply of workers so we could get these big payroll numbers. It also is important in our growth numbers in terms of really pushing, the economy forward. And we've seen immigration already before the Trump administration start to tail off. And that could be another really important feature of this year if we, lose that extra push on supply. So that's certainly something to watch.
All right, Claudia, how about the wage side here? Again, average hourly earnings, the consensus is 3.8%. That seems like a healthy level. If you're the Federal Reserve, how do you look at this market with the unemployment rate, the average hourly wages, and how do you think the Fed looks at this?
All right, so the Fed has told us, and for some time now, that they look at this labor market as a good thing, right? These wage numbers are not problematic. They don't see the inflation. They are tolerating a slow disinflation, right? We are seeing these real wage gains. So this wage growth is good. Now, it is backed up by some productivity growth that's been higher, but these are solid wage gains that are outpacing inflation. Maybe it does mean it takes us a little longer to get back to that 2%, but the Fed is being patient as long as we're pointed in the right direction. And that kind of smooth transition back, that's exactly what we want to see.
Claudia Sahm, stay with us. We'll give you a chance to look over the data here. Dr. Sahm will stay with us before we go to Ellen Zentner. And we're thrilled later in this hour, given all of the importance of a dollar is litmus paper, Rebecca Patterson will join us. Sahm, Zentner, Patterson, we welcome all of you on YouTube. Subscribe to Bloomberg Podcasts. Growing each and every day. Thank you for the interest in all that's going on at Bloomberg Podcast. Really appreciate that this morning. Final look here. Futures at -5, the VIX 15.34. To John Tucker and the nation's job reports.
And coming out lighter than expected. Change in non-farm payrolls, 143,000. The expectation were 175. The revisions for the change in non-farm payrolls, 256,000 was the reading for December. That has been revised upward to 307,000. The unemployment rate coming in at 4%, a little lighter than expectations. Economist surveyed by Bloomberg were looking for 4.1%, which is what we saw for the month of December as well. The average hourly earnings month over month, that is elevated 0.5% right now. We were looking for 0.3%, at least the Economist surveyed by Bloomberg. As far as the market reaction, media reaction, equity futures, they are lower. The Dow futures down 55. The S&P E-mini futures 10 points lower, down about 0.2%. NASDAQ futures down 63 points right now. The 2-year yield, it was up a basis point before. Now it's up close to 4 basis points, 4.24. The 10-year yield, that was unchanged before. Right now, it is up 3 basis points, 4.47. And that is your market reaction. Tom and Paul.
Thanks so much, John. Great job. Really appreciate that. I'm going to call it a churn to the market here. Futures at -6. The yield space, I look at the 10-year real yield again, 2.03 out to a larger statistic, 2.0. I'm going to make it 2.06, so a bit elevated yields. Paul, 100,000 plus revision. I mean, I've got to look, I've got to look here, Paul,
Yeah.
You got to add the two numbers together. 143, we came in light.
Sure.
But I got a plus 100,000 revision. I think that's 243.
Yeah.
Would be the sum.
Solid. And then last month was revised higher from 256 to 307. So I don't know. The labor market's fine.
Claudia Sahm with us right now, and the squishing of the numbers. Claudia, are they squishy now because of the pandemic or because of immigration trends? Or do we just need to get used to this at the turn of the year?
Today's data, there's a lot of moving pieces with today's data, just because we had large revisions to both the payroll employment and the household employment, and and some things aren't as comparable from December to January in households. So this is just a really tricky one to get down into the details of it. So I wouldn't. So it's kind of more of a January effect with like bringing a lot of data in, but broad brush, I mean, I agree with your characterization. The payrolls, you got to take that, a set of them together, not focus on just this latest number, because again, hitting consensus with all these moving pieces was going to be tricky today. And those payrolls look good. I think it is, that's kind of a warm average hourly earnings number on the wages, but the other wage data that we've gotten has looked more moderate. So, there's plenty here to pour through.
I'm struggling for news here, Paul. I got DXY back to 108, so I got a stronger dollar.
Stronger dollar.
Claudia Sahm is saying nobody cares, but,
Well, S&P futures down just 13 points, NASDAQ down 56, and the 2-year Treasury yield, as John was reporting, up 4 basis points, 4.25% right here. Claudia, so what's the next data point here? If you have a sense that the labor market remains solid, what's the next data point that you will be looking for and you think the Fed will be looking at?
Right. Well, this very much continues the Fed's, the labor market's in a good place. We have the luxury of time. We can wait and see. So what are they waiting to see? They're waiting to see what happens with inflation. Right. So the next most important data are with the CPI and to see if we continue to make progress, and everything they've got here today kind of lets them stay in that, on that trajectory.
Okay, Claudia, thank you so much. Claudia Sahm, just love having you with us. Honored around this jobs report with New Century Advisors. Ellen Zentner's had a little time to ponder the data. I'm going to go back to what the hitters are doing. Like in late winter, you don't go to Patagonia for fly fishing. You go to the Trinity River in California, or the Chinook or salmon or whatever in Oregon, or that. Ellen Zentner of Morgan Stanley joins us on the wealth effect. This is where I met you years ago, was a consumer effect, which is now a wealth effect supporting this GDP in this labor economy. Have you ever seen a wealth effect like this?
It's pretty large. It's pretty large.
I agree.
Do you want to venture to say how long ago it was that we met?
It's 3 or 4 years ago. We were just out of Texas. But
I'll tell you what I love most about the report this morning is listening to the dulcet tones of John Tucker read off the numbers. I mean, I want him to read me payroll numbers each night so that I can go to bed like a lullaby.
Yes, he puts us to sleep here too. Right? What do you see in the jobs report around this misguess on growth and the wealth effect that we're living?
Well, the thing is, look, we've been really surprised at just how strong the economy has remained, even through all of the Fed hikes. And yes, they cut rates 100 basis points, but then you had this tremendous backup in yields, which would tighten financial conditions, and you'd think we'd get some slowing out of that. And so now you get these revisions, and you look at the second half of 2024, and it looks even stronger in the labor market than what we had thought, and looks a bit more in line with the strong GDP growth that we were getting. So there's just no slowing here.
Yeah.
And, I have to give props to my former team, the U.S. economics team at Morgan Stanley Research, because they had 140 on payrolls. Now, if they were way off, I wouldn't mention that.
Of course.
But they had 140 because of wildfires, and you could definitely...
Because they moved you over to Lisa. I mean, you would have been at a higher number. I'm kidding.
Oh, I'm sure I would have been way off. Thanks, Tom. But these numbers even have the weather effects in there. I mean, you can look at the number of people that were the fire. And so you look at the number of people that were not at work due to natural disaster, weather, that sort of thing, and it was outsized. So you know that this would have been a stronger number without it. And we've just got a great trajectory on the labor market. Now, the Fed, I believe, took a hard pause last year. They used boilerplate language that was basically, we'll let you know when we're going to move again. And clearly there's no consensus on the Fed to do anything but sit here. And so that's going to make it even more difficult, or raise the bar for them to see the kind of data that would mean they need to cut. So I completely agree with Claudia. They're just going to hang out here. They're looking golden for making that decision to stop.
And do we get to the point here? I've heard some people suggest that the longer they do wait, the odds actually go up that the next move would be a rate hike. Are you in that camp? Or I have a hard time thinking about hiking rates.
Well,
but
there's odds on it. I don't know that they're very high.
Right.
But, think about back in the mid-90s, we had a mid-cycle growth correction, and the Fed cut rates and then held steady. At that time, about 75 basis point cut in rates. We cut rates 100 basis points this time. Then they held steady. The economy started to strengthen again, and rates increased again at some point. Right? And so I don't know that it raises the odds, like just pausing for this long means we're going to get a reacceleration in the economy. But that's a plausible outcome. I would put a lower probability than the next move being a cut, and we still have a tremendous amount of policy uncertainty.
Right. Is the unemployment rate 4.1% down a tick to 4.0%? I mean, 3.9 is a lot lower from 4 than 4.1 to 4.0. Does that matter to you that, it's going in the way nobody expected?
Yeah, I think what matters is looking at the underlying details and saying what caused the drop in the unemployment rate. Is it lower labor force participation? People just left the labor force? Is it because more people joined and were able to find jobs, right? So that comes down to that household employment report.
And a lot of deeper data.
Yeah, a lot of deeper data. The unemployment rate's one of the hardest things to parse. It takes a lot of time because there's a lot of undercurrents in what drives it.
I want to go back to wealth effect, because this is something, the American consumer, folks, is what Ellen Zentner knows. For those of you on YouTube and across this nation in your community, Ellen Zentner, Morgan Stanley with us right now. Kristina Campmany scheduled to be with us. Thrilled to have Rebecca Patterson with us as well. But right now, Zentner of Thematic Macro Investing at Morgan Stanley. Okay, just suggesting 7 nights, 6 days, single occupancy, boat package, Belize fly fishing. You sell some shares of NVIDIA, and for $8,525, you're fishing in Belize, which I'm sure you've done. I mean, the answer here is the wealth effect, to me, is ginormous right now when I look at the idiocy of some of these stock moves.
Yeah, in Belize you can do fishing from the beach for rooster fish. Look that up. See what that looks like.
A rooster fish.
Yes, it's crazy looking.
You throw them in the skillet?
No. You slap them and send them back on their way. So look, the wealth effect is, as you said, it's really strong. Now, it's much stronger than it's been in my memory of practicing as an economist.
Thank you. That's what I want to get at.
And so there are a couple of things here. Is it, so one, we have created a tremendous amount of wealth. And so one, are we spending the same amount out of that wealth that we normally do? It's just wealth is that high. That is one possibility. Or is there still some lingering effects of COVID, which taught us we're all going to die tomorrow? And so spend it if you got it.
Interesting.
So is it that the marginal propensity to consume, that's a great economist term, Tom, you like that. Marginal propensity to consume out of wealth may just be higher. And so does that fade the further we get away from COVID, the further it's in the rearview mirror? Or does it just stay that high because now we've had some structural shift?
Have you seen research on this? I mean, you're in a cat's bird seat to see research on this.
We have done this research.
What do you see then? To me, it's an unspoken huge deal. Am I wrong?
Yeah. So what I see, what I believe I see in the numbers is that it's just the amount of wealth that has been created has just been that large. I think that we're in the midst of seeing, the data is quite lagged on this, that the marginal propensity to consume out of wealth is returning back to normal, but that the wealth we've created is just that high.
Yeah, it's just, I mean, and it kind of goes back to that issue in this U.S. consumer, if this consumer owns assets, stocks, bonds, real estate, feeling very good about the world.
Yeah, and
if you don't, that inflation kick has been even more pronounced for those that don't.
Exactly. And look, we're a services economy. 60% of all spending is services. So you slap tariffs on goods, and you're going to deepen that trend that goods spending has been slowing and that services spending has been taking share. And we're going to still go out and spend on all the services we can.
So how do you think about over there at Morgan Stanley this whole tariff discussion over the last couple of months?
So I think it creates an extremely uncertain backdrop. We are just starting to see a lot of the business surveys show sentiment damage from the uncertainty around tariffs. It's awfully hard to make business decisions in this environment. And so as this volatility around tariffs, do we or don't we put them on, continues, I think even if your bottom line isn't hit from tariffs, you're going to start building precaution.
Every time you're on, I learn something. A rooster fish is 4 feet long sometimes. 100 pounds. Have you caught one?
No, I haven't caught a 100-pound, 4-foot rooster fish.
Are they like barracuda?
They're just one hell of an ugly-looking fish.
But you're in Belize, so who cares?
Yeah, you're in Belize.
You're
That's
in
the
Belize.
point.
It's the wealth effect with Ellen Zentner. Thank you so much. With Morgan Stanley. Just absolutely extraordinary. We got a little Zentner driving the market higher. We were red on the screen, and now a little bit of green. Critically, the VIX comes in 15.00 on the VIX. You got to, I'll tell you, 14. I don't see a 14 yet. Maybe we're there and I missed it. Yields higher, 3 basis points in the 10-year yield, 4.46%. And yes, I follow the 10-year real yield fractional, 2.02 out to 2.04. We had some dollar strength off of this. What a treat to go from Claudia Sahm and Ellen Zentner over to the wonderful efforts of Rebecca Patterson, tying it all together, and particularly with her expertise on foreign exchange. She's a senior fellow at the Council on Foreign Relations and had parchment out at Bridgewater and at Bessemer Trust as well. Rebecca, good morning. Good morning. The prosperous America that is the backdrop for this 4.0% unemployment rate, does it continue? Do you have a sustaining nature to our real GDP?
Well, when I think about the economy, and we know that consumption is the majority of what drives our growth, to understand what the consumer does, you have to think about their ability to spend. Do they have the money and the job, which today underscored that they do? And do they have the confidence to spend? They might have money, but they don't want to spend it. That's what we've seen in China. In the case of the U.S., I think we do still have both confidence and ability. The latest confidence surveys, although very bifurcated by political affiliation, are still trending higher. So for the short term, at least, I think that the consumer continues to drive this, and that's clearly very positive for the stock market, broadly speaking. That said, what we know has driven the wealth effect, housing, equities primarily, anything that happens that really spooks the stock market could cause this higher income consumer to pause as well quickly. And we know there's risk to that from possible policy announcements from the new administration, or even things like we saw in the last week or so with DeepSeek. It doesn't take much at these valuations to cause equities to get a little bit skittish.
So, Rebecca, if you step back here and think about it, put the jobs number in context with what we're seeing from some of the policy decisions of this Trump administration. The economy right now is in pretty good shape as it relates to the labor market, inflation. Yet the talk about tariffs continues to be an uncertainty. And what do you make of some of the economic policies and rhetoric we're hearing out of Washington?
Well, there's 4 that I think we're all focused on in terms of the economy and markets, and that is trade, taxes, immigration, regulation. And at the end of the day, what happens to these markets and to our economy will depend on the timing of those and the magnitude. And unfortunately, we don't have a lot of clarity. Regulation, we probably have a little more. I think that will be coming, deregulation. But the problem with it is it doesn't happen overnight. There is a process that this administration will have to follow, and it'll take a couple of quarters to actually be felt in the economy. On immigration, we know the trend. But we don't know the magnitude, and the magnitude will matter for the labor force and for wages. Right. Trade, I mean, again, I don't know. No one knows. My gut is we are going to see more tariffs, and it's a matter of time. I think once we get those April reports back to the president's desk, that'll give him the green light to take his next step on tariffs. And I would expect we will see tariffs on Europe. and very likely some more on China. Canada, Mexico, we'll see.
T-Live, the Bloomberg Terminal folks has great analysis leading the charge today. Enda Curran, Chris Ansey as well in Ira Jersey helping out on the unemployment report. Rebecca, here's the first line. This is from Enda Curran, our global economy reporter. The annual revisions now show job growth averaged 166,000 a month. That would be a slowdown from an initially reported 186,000 pace. To me, that's pretty much quiescent. I mean, they're down, but they weren't the gloom that many people were modeling.
Yeah, I would guess the Federal Reserve today is very happy. And we're seeing a moderation in the pace of job growth, but very, very resilient labor market data showing us that this economy can continue to grow at above its potential long-term rate. So maybe no rate cuts forthcoming in the near term. That's already priced in, that we don't get a rate cut probably till mid-year. But at the same time, the normalization of the labor market also means they don't need to be too worried at this moment about having to go the other way and tighten.
I mean, we're going to have Anna Wong on with us later. She'll be expert in that, Paul. But basically the revision was what Mike McKee talked about, was, it's a revision, but get over it. It's just that, a revision.
Exactly. Yes, agreed. We have them every year.
Yeah.
So, Rebecca, we heard from the Secretary of the Treasury. Thank you very much. Rebecca, we heard from the Secretary of the Treasury in an interview saying, love to talk down the 10-year yields. I know you have some thoughts on this. How do you think the administration thinks about interest rates?
Yeah, it was really striking to me that Treasury Secretary Bessent highlighted that they're focused on not letting the 10-year yield rise too much. I don't remember in my career a focus on the 10-year yield by a Treasury Secretary. Given the size of our debt, the increase in our borrowing costs, the interest we have to pay on our debt, it makes sense. But then how does he do it, right? If you can't, the Treasury market is $27 trillion. It's not that easy to manipulate. And when I think, what can he do if they can limit the unfunded increase in our deficit, so you get lots of pay-fors, and maybe it doesn't go up as much as some of the estimates, that would probably provide some relief that we're not going to have to increase bond supply a huge amount. He could try, and this is something to keep an eye on, and we should talk more about it in a future date, stablecoins. Stablecoins right now own a decent amount of short-term Treasury securities as their reserves to keep their peg to the dollar. And this administration is very focused on increasing the use of stablecoins around the world, in part because they know that's going to be a good source of Treasury demand. More on the front end than the long end, but still. I think he can also look at Treasury issuance, and even though he posed Yellen for this, he could issue more debt as needed, shorter maturity than longer maturity. So he has a few tools. It's interesting to see which levers he pulls in the coming months and quarters to do this. But if we have strong growth like we had today, that's a benign reason for the yield to go up, but it will go up.
It's tacky of me, Rebecca, to get out to March 7 and the next unemployment rate. That's when your beach season clicks in, right?
We're getting close. We're getting close.
50-50 here. Rebecca, I look at March 7, and you mentioned the fiscal structure and pegging the 10-year yield. I mean, we roll into March. Is it correct to say we're the nearest fiscal crisis?
That you mean with the debt ceiling, or just the size of the debt?
Just as general for our listeners and YouTube viewers, the bottom line is we get out 30 days and it's a whole new world after all of fiscal stress.
Yeah, I mean, we are facing some major debt-related fiscal challenges this year. We're going to have to see an increase or an abolition of the debt ceiling that's being discussed in Congress. I think we will get through that. I'm not sure which path they'll take, but I don't think we're going to have a crisis this time with a Republican-controlled Congress. What's more important to me is how the reconciliation goes for the budget that they're going to try to pass this year. They have to pass this year. What kind of shenanigans are used to make the math look better? Both parties do this, so I'm not pointing a finger, but there are going to be some shenanigans. And then how much is that increase? And what is the market going to tolerate? If we're putting tariffs on our biggest buyers from overseas of treasuries, are they going to be looking more towards gold, and we're going to keep seeing new all-time highs for gold as they buy fewer treasuries?
I'm not going to get a gold call from Kristina Campmany. Rebecca Patterson, can you print 3,000 gold for us?
I wouldn't rule it out. I learned when I left the sell side, you don't have to give numbers and dates anymore. That is the hardest part of a sell side analyst. Since I don't have to, I'm not going to, Tom, but good try.
With the sell side firm, the Council on Foreign Relations, Rebecca Patterson. Thank you so much. And now we turn for this is just, I can't say this commercial free, this is just brilliant intellectual content on YouTube, on radio. And we finish strong with Invesco, Senior Portfolio Manager. That doesn't even describe her abilities. Kristina Campmany as well. When you make a prediction, do you avoid level and the time frame? Is that something you've learned to do?
You can only choose so many: time, level, direction. Hard to get all three right at the same time.
Help me here with the yield now. Is it normal? That's a question Sweeney would ask.
Is it normal?
Is it
what do you
normal?
Mean? Like our reaction to payrolls here, or what?
No, we had this 4-year window of negative yields and wicked low rates, and now we're back here, and we better get used to it. After this jobs report, should we get used to where yields are right now?
Look, I think we've kind of been in this consistent thesis for the last couple of months that 425, 475 are probably reasonable bounds for the 10-year, and I think there's going to be a lot of noise within there, and we sit and say, our only certainty here is uncertainty. We have all of this information flow coming from DC. What are the priorities of the administration? How do we get them? What's the order? What's the magnitude? And I think that's going to cause noise out the back end. And where there's a lot more stability is in the front end, because I think the Fed is very comfortably on hold as they wait for kind of more clarity on what the path is for real econ data.
All right, so then it becomes you answered kind of the duration question a little bit. How about the credit quality question? Because again, somebody can sit there at a 2-year Treasury at 4.25%. That's not a bad living. Do I do that, or do I take some credit risk? Do I go high yield leverage loans? How do you guys think about
so when we think about that, I think we're really happy to say we think that the front end is a great anchor in the market, and you no longer have negative carry to where policy rates are, and then you can build interesting portfolios around front end assets, and that's where we're willing to take some credit risk and look at mortgages that inherently have some selling fall component to them. So credit as a whole, I'd say, again, like we have our credit specialists within Invesco, but the way we're looking at it, certainly short duration, double Bs look really interesting. There's mortgages in Europe and the UK that look interesting.
Where are you on duration? I mean, to me, it's just absolutely fascinating. We mentioned earlier, should John Tucker get the 2-year CD or the 5-year CD? That's a really important question right now, isn't it?
It is, absolutely. And you take a step back, and we live back in a world of BABs, right? Bonds are back, and there is definitely value there. However, you look in the last year, bills were the best performing asset out there, right? Because you've had this negative an inverted yield curve and whatnot. So when we think about duration and where we want to be in the curve, I think there needs to be more term premium built in a bit for depending on what we get fiscal wise, and it's really around the front end that there is value.
So again, if I'm the Federal Reserve, I look at today's data, I think I have a little bit more conviction, like I don't have to do anything. I mean, how long? Do I just take a few months off here, or what do I do?
Our base case, I think, is that the Fed can comfortably, one data point doesn't change the Fed's thesis. 2, maybe they start to get worried in one direction or the next. And 3 is really when they can start to react. And if you think of, we have a new administration, we have a massive amount of different policies coming down the pike. Even if you go through the list, tariffs, will it have a bigger negative growth, negative confidence impact, or will it be an inflation impact? Which one of these things is it going to be? So I think that tells you the Fed says we need a series of data to have comfort.
But to that wonderful summary you just gave, do you then pull in your maturity, your duration?
Yeah, I think you do.
Like how much? By 2 weeks?
Look, we're kind of, again, you can tactically be playing duration out the curve. I think will we probably test 5% 10s again or at some point this year? Sure. Are we there yet? Do we need to be massively short? No, I don't think so. I think you can tactically play out the curve. Where you want to own and there's value is 2s and 5s and kind of anchoring some assets there.
What's the excitement out there right now into the spring of this year in bonds? Is there a lot of new issuance? Are you getting called up all the time?
There's definitely
people sending you on junkets to Belize.
There's definitely a lot of issuance coming down the pike, and I think again, as the U.S. market and kind of that dominance in the world, there will there's always money that's going into there. I think when we look across the markets that we look at, which are rates and EM and credit, what's interesting to us is really FX from here. Like there's a lot of potentials. Yen can be a real mover from here. You have a lot of commentary from the administration about a strong dollar, but does that really play out for a strong dollar, or do we have some like weaker dollar tendencies kind of in the next 6 months?
Emerging markets, tell us where you see opportunity, or is everything tied to China? I don't know how to look at it.
I think it's really idiosyncratic from here. So I think if you talk to EM specialists, they will.
Unfortunately.
But I think like some of the focuses are these like Egypt people are excited about, and Turkey, and there's like Argentina is a great story, right? Like there are these, but like Argentina is a hard asset story, or right, like where people are concerned are China, tariffs, Mexico, there's so much noise. Brazil has its own idiosyncratic growth and politics and what's going on there. So it's really, I don't think you can say blatantly.
Gotta do your work, it sounds like.
Yeah.
A woman of Villanova. Eagles?
Oh, I don't know. I'm going to go. I grew up outside of Boston. My husband would tell me that I'm supposed to be a Giants fan, but I'm going to go Taylor Swift fan. So Chiefs.
We played Taylor the last time.
That's the power.
Is that okay?
The power.
Yes.
So
That's a great call.
Kristina Campmany's how they get to 155 million.
Exactly.
Thank you. Just always brilliant to have Claudia Sahm, Ellen Zentner, Rebecca Patterson, and then Kristina. Just incredible set of academics there to get you through this job day. Paul Green on the screen. I mean, it's fractional. I'm making it up, but did we get a 14 VIX? Let me look. VIX.
You're sitting
index,
right at 15.
GIP. Did we dip under
yes.
here? Yes, we did.
14.97.
We got a 14.97.
Yep.
How'd you get that so quickly?
Because it's right on my...
How do you do that?
I got the Michael McKee monitor. It's just, it works. It's wonders.
Mr.
Bitcoin up 2%, just under 99,000, Tom. I know you're going there next, so I thought I'd front
Mr.
run you there.
Bloomberg stopped me the other day. He said, Tom, I need more terminal functions. I said, Sweeney does that.
We got plenty.
Yeah, I said,
But it's looking
Futures
good.
up 4 or that. We say good morning to you. We got a really eventful hour. Kevin Hassett will be in conversation with Jonathan Farrow. He's the NEC Council Director, of course, widely associated with Republican economics. As Kristina Campmany said, the Taylor Swifts are, I guess, favored. We played Taylor last hour. From Philadelphia, it has to be Daryl Hall and John Oates. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene, Michael Barr, Lisa Mateo on assignment in Berlin. John Tucker's with us as well. In this 9 o'clock hour with futures up 4 after a bang-up jobs report and a huge revision as well. Coming up, conversation with Kevin Hassett, the NEC Council Director. He of Pennsylvania, PhD. He's from Greenfield, Massachusetts, among others. And, of course, great notoriety on a book that was down 36,000 years ago. We need to get a market adjustment right now. We do that with John Tucker.
I'm going to say we're kind of groping for a direction. S&P E-mini futures up 3. The NASDAQ futures 6 points higher, and the Dow futures right now up 47. The more policy reactive 2-year. It was up 1 basis point before the jobs report. Right now up close to 5 basis points, 426. The 10-year up 5 basis points. Right now it is at 448. Well, the economy adding 143,000 jobs in January. And back to you,
John Tucker, thank you so much. A first conversation of a second Trump administration. Kevin Hassett with our John Farrow.
Back, get away from the numbers we've got in front of us just now and think about the last few years. What kind of labour market are you and the team inheriting?
Oh,
I first also want to say thank you. It's great to be back at Bloomberg, and thank you for the congratulations. And you're right. If you look at the people who've been, in the office I am in now, like even Lael Brainerd before, I'm kind of humbled to be there. I also want to say thanks for leading off with Mike McKee. I've been watching him do jobs stuff for like 20 years, and I always want to hear what he has to say. And sure, he had a couple things in there that I hadn't noticed in the release, and so that's great too to be back. I would say that the big headline for me is something that you guys haven't talked about yet, but I'd encourage you to, is that we've got this thing going on where the professionals at the BLS keep revising down the data. And so the headline for me when I'm looking at this is that it was the biggest downward revision. The benchmark goes through last March, the biggest downward revision since 2009. And we're still sifting through the numbers, but it's really, really big. Could be as much as, if you go a little bit beyond the month, the last month, it could be as much as 1 million jobs fewer than we thought after this benchmark revision. And so the thing is that why is it that we keep seeing sort of positive jobs numbers, and then when we look back a year later, it's way worse than we thought? And so I say that what we learned with all these downward revisions is that the Biden economy, the Biden jobs market, was way worse than markets thought. And that's sort of consistent with the rest of our views that their policies were unwise, and there's a lot of cleaning up to do. And I think that if you look at ISM that just came out, that market participants believe that President Trump is going to be able to turn things around. And with these big downward revisions, we can see that there's actually a lot of work to do.
So, Kevin, that's your opinion on the state of affairs. I want your view on the policy matter. And I want to get a bigger picture view as well, because I think your approach is getting lost in the trade headlines. The fuller approach is getting lost in the trade headlines of the last week or so. Can I ask you how your tax plan might complement the trade effort, how these two things might gel?
Well, it's obviously, President Trump's tax plan working together with congressional leaders. We had the A-team meeting together in the White House yesterday, including meeting with the president and the vice president to talk with the top House members about exactly what they want to see in the reconciliation package and finally the bill. And in politics, there's always going to be a work in progress. But I can tell you that President Trump has assembled the very best possible team to negotiate with Congress and make sure that they can be successful. And you've seen some of the news from that. And I think the headline news is the president has stated, as he always does, exactly what he wants. That's not like just negotiation. That's what he wants. And the people in the House were able to work with it. And now it looks like there's a lot of positive momentum after they met with the president.
So, Kevin, just going through the list of things that the president wants, and of course you know them well, but for the benefit of our audience that might just be joining us.
Sure.
Ending taxes on tips and overtime, new cuts for Made in America products, extend TCJA from 2017, expand the state and local tax deduction. There's a lot there. One of the offsets was to end the carried interest loophole, which was a little bit of a surprise. There's another offset as well, potentially in the mix. And this is where the trade story fits in. And I'd love your view on things, Kevin. What is the objective of the trade approach? Because in the first term, it was about reciprocity. And the administration at the time, and Larry Kudlow was in your position, made a pretty forceful argument to say, we're doing X and China's not following up. They need to do more. That all made sense. Now it's about national security, the southern border. It's about drugs. It's about potential revenue raising as well. Which one is it, Kevin? Can it be all of the above?
Oh, the bottom line is the first time I ever met the president, right at the beginning of 2017, that one of our first discussions about trade policy was about reciprocity. And so 100% that's going to be a key factor in President Trump's thinking and his team's workouts from his thinking as we work forward. And when you think about, well, what is reciprocity? How should we think about it? Then a lot of people focus on tariffs. And if we look at just tariffs, then you'll see that our trading partners tend to have tariffs that are 2 or 3 times higher than our tariffs. And so, like, if we were going to be reciprocal, then they could come down or we could go up, but it would be a lot different trade policy. But the way I like to think about it is just think about the fact that we have a tax system in the U.S. that's fundamentally different than the tax systems everywhere else in the world. And so I had my guys a couple days ago just update the numbers I always look at, and we found that U.S. multinationals had paid foreign governments $370 billion in taxes because of value-added taxes and income taxes in 2023. And foreign multinationals operating in the U.S. paid the U.S. government only $57 billion in taxes. And so they have 3 times the GDP we do, globally. We're about a quarter of GDP. And we're paying $370 billion, and they're paying $57 billion. And that's not reciprocal. That's something fundamentally different. And what President Trump wants us to do is to come up with a really smart program that includes trade policy, tariffs, and revisions to the tax code. And he wants us to make it work so that America's on a level playing field again. And the reason he wants to do that is not because of the numbers, it's because of the people. The people in America who don't have jobs because we're paying $370 billion a year in taxes to foreign governments in order to incent our companies to not create jobs here, but create jobs overseas.
Kevin, you didn't mention Europe,
to the president.
but it sounds like you're talking about Europe. What's the ask of the Europeans?
The president is going to negotiate with the Europeans. He's going to negotiate with everybody. And at the time when he does that, you'll find out what his asks are specifically.
Are some situations more negotiable than others? We've seen already you put the threat on the likes of Canada and Mexico. Mexico provided some concessions. We saw the same thing from Colombia. Is the approach to Europe going to be any different?
I mean, 100% what happened over the last week wasn't a trade war. Why would you have a trade war with your neighbors that you trade with so much? It was a drug war because 90,000 people died of fentanyl because of the fentanyl coming across the borders in Canada and in Mexico. A lot of times the drug from Canada was coming across from the Mexican drug cartels, by the way. And so the Canadians and the Mexicans made a deal with us to make progress on this because it's absolutely unacceptable that more people die from that poison than from the Vietnam War in 1 year. And so we just had, a discussion about how are we going to win the drug war, and that's what happened then. I'm not aware of, nor have I been informed of, massive fentanyl shipments from Europe. And so the discussions we have with Europe will be about other things.
So it sounds like you want to do revenue raising on more tariffs, potentially when it comes to Europe. Does that need to happen before the tax bill, or is the president willing to expand the deficit, Kevin?
The president is negotiating the parameters of the tax bill as we speak with members of Congress, and he's asked the Treasury Secretary and me, the Director of the National Economic Council, to meet regularly with leaders of the House and the Senate and to see what's possible and what's right and good and should happen, and to get them as close to exactly the same thing as possible. And that's what we're going to do. It's,
Kevin, as you know,
bow to you guys.
Republicans in Congress are not on the same page. He spent a lot of time with members of Congress yesterday, but he's going to have dinner this evening with senators. Do you have a sense of what the president prefers at this moment, 1 or 2 bills, when it comes to Congress enacting his legislative agenda?
The president is going to work that out with them, and he's talking to everybody. I know that there are different opinions on the Hill, and we'll see what happens.
You also know, Kevin, that confidence coming into 2025 from corporate America is sky high. Sentiment is really robust, it's strong. You know that, the president does. We all know that here on Wall Street. Is there a risk that you squander that confidence? That confidence doesn't translate into action, into hiring, into CapEx, without clarity on a trade story?
I think that we're a couple weeks in, and we've made an enormous amount of progress. And everywhere I look, people are saying, how could you guys possibly get so much done in such little time? And the thing that I can promise markets and you guys, and you'll probably be back next week with you to talk about more things, that this pace of progress is not going to slow. It's not going to slow at all.
Kevin, stay in touch. Looking forward to covering the next 4 years with you. Thank you, sir. Appreciate your time.
Mike.
John Farrell, with the experience, Kevin Hassett, it's not the first time he's done this, but I thought that was exceptionally cogent and stating out in the month of January. What was it? I mean, how many days ago was the inauguration? And the answer is, with the news flow, it seems like it was 15 years ago. But the answer is, there is Kevin Hassett with a nascent jobs report discussion with the NEC, again from the University of Pennsylvania and the University of Greenfield, Massachusetts as well. Kevin Hassett with our John Farrell. Bloomberg surveillance on this jobs day. We're brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing, wealth management, capital markets, investment banking. Thank you, Oppenheimer, for your participation on this jobs day. Over on T-Live, the Bloomberg terminal service for all of our members worldwide, Enda Curran is in charge, and he reports to us now. And I'm confused over what was the number revision of 800, I'm guessing 18,000. I believe Kevin Hassett just told John Farrow it was 1 million. What was the revision statistic? Do we know?
Well, the one that we're running with, Tom, is that the revisions show the jobs market averaged about 160,000 jobs a month last year, which is below the initially reported 186,000. So that's the number that we're running with. And I did hear Mr. Hassett make the point. It was he's counted up to, I think he said 1 million odd. But so you can look at this two ways. Of course, the President Trump's administration are saying this makes the point that the jobs market was weaker than it looked, and clearly it was. It's a downward revision, but of course there are others who are saying the revision it wasn't as material as expected, and it still shows overall the jobs market has held up okay.
Right. How important, getting to March 7th, is the fiscal state of Enda Curran's Washington? We've had a bit of chaos here, or I should say a lack of clarity or noise in this January report. Is the February report going to be even crazier?
Well, we are at such early stages of a major new policy rollout by this new administration, Tom, that it's going to become clear. I mean, it's interesting. The January figures, there had been some expectation that maybe the wildfires or the severe winter weather would have impacted, but there was no discernible impact. Now we go into February. You look around, what are the variables? Well, one of the big talking points, of course, is what's happening with the federal workforce. We have reported tens of thousands taking that buyout offer from the government, but will that surface? When will that surface, and in which month of the data, for example? So, I think for now, the jobs data is probably, as you were, it'll carry on its particular path, subject to what's going on in the economy. But when these big policy changes start to impact one way or another, that's probably going to take time. I mean, think about it. There's deportation, there is the trade and tariffs policy, and then there is the what's happening with the public workforce. President Trump's team will say that will drive investment. You just heard Mr. Hassett make the same point. It will drive investment to create jobs. Some economists are more cautious on the outcome. So it'll take a few months to become clear, I think.
And Mr. Hassett also made the point to a question from John Farrow that it was not a trade war with Canada and Mexico. It was a drug war. And then John followed up with, okay, well, how are you going to have these discussions with Europe? What's the view from Europe about trade, the United States?
Well, I mean, it's very interesting because on paper, clearly President Trump came along and threatened these tariffs on Canada and Mexico, at the beginning at least, over the fentanyl, the illicit drugs trade, and on illegal immigration. And that was using tariffs as a tool in a space beyond merchandise goods. But I think also as the commentary proceeded from the White House progressed, there was also several references to the goods deficit, with both, in particular, Canada came in for a swing there, and at one point there was a reference to Canadian defence spending as well. So it's interesting that Mr. Hassett said, why would you have a trade war with your neighbours? Because it looked like they were heading that way last weekend, but he has narrowed the focus back down to fentanyl.
Enda Curran with us, our head of global economics, and of course all of us work in Asia during the pandemic. And I think you've got a wonderful prism coming from the Pacific Rim over to Washington. How barbell is the American labor economy? The way we describe it, Enda, is the haves, the have-nots. Some of us of a certain persuasion go back to John Edwards on a lawn in Louisiana 1 million years ago talking about two Americas. From where you sit with your team, how too much two Americas are we?
Well, I think that is an issue, Tom. I mean, the headline, the aggregate data does point to a strong economy. It's holding up. The jobs market, as we saw today, holding up okay. Companies are hiring, wages going up, and unemployment rate actually fell. But clearly, there are plenty of people who don't necessarily feel like they're experiencing any kind of an upswing in the economy. You look at the problems in the housing market, the cost of a mortgage.
Well, Craig Torres, the recent article that Craig Torres did was absolutely magnificent on food lines across this nation.
That's right, Tom. So there is that chunk of society who clearly aren't feeling any economic uplift. And we saw it in the election results. on paper, a strong economy going into last year's election, but of course we now know that people are very upset about the price and the cost of living. So clearly this new administration has an opportunity to address a lot of that, and they have identified living costs and inflation as one of their key priorities, for example. But of course the question is the balancing act. Can they pull off all of these big levers that they want to pull without also hurting the economy? That's going to be the big trick.
Right. And the Chiefs or Eagles?
I think probably, as a grateful guest here, Tom, I'll go with the Chiefs. But I'm no expert on NFL, I have to say.
I mean, Campmany went with the Chiefs. Curran's going with the Chiefs. I see a trend here.
That's some smart money there.
Enda Curran, thank you so much. T-Live, just precious. Can't say enough about it. Chris Ansian, Enda Curran out on T-Live with really good analysis for the users of the Bloomberg terminal. Bloomberg's surveillance this morning were brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill. They'll do it in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, this offer ends March 31st. See if your company qualifies. Do that at oracle.com/Bloomberg. Futures are green. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. A federal judge has stepped in to block the Trump administration's buyout offer given to more than 2 million federal employees. This federal employee who took the offer is now left in uncertainty.
I would go to my computer and check, thinking, well, maybe it's late at night and they're working, and nothing would come. And then I was nervous.
The administration says more than 60,000 government workers have taken the buyout deal. Federal workers have now been told they have until Monday night to keep signing up for the buyout that would have them put on leave as they remain on the payroll through the end of September. Unions have sued, calling the program unlawful. President Trump's efforts to end birthright citizenship have been blocked nationwide. A federal judge issued a preliminary injunction, meaning the Trump administration cannot deny citizenship to children born on American soil of immigrant parents. District Judge John Kuhnauer in Seattle accused the president of trying to change the Constitution.
It has become ever more apparent that to our president, the rule of law is but an impediment to his policy goals.
The ruling comes a day after a judge in Maryland blocked President Trump's order. From the Midwest to the Northeast, another round of winter weather is in the forecast. It will start this weekend. Saturday afternoon, you'll see a little snow in New York and Philadelphia, but late night, it really becomes thick. The Catskills could get at least 6 inches. Boston could get up to 9 inches of snow. A New Hampshire man has become the second person known to be living with a pig kidney. Today, Massachusetts General Hospital announced that Tim Andrews recovered well enough after the January 25th transplant to leave the hospital a week later. Andrews calls himself a new man free from 2 years of dialysis. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Carl Weinberg at High Frequency Economics, HFE Economics, High Frequency. Paul, to your point, change in hourly earnings above 4.1 versus 3.8 consensus. Hours worked pretty much on plan, 34.1. Average hourly earnings above. I mean, that's the kind of tone that, you know, we've been seeing.
Yep, absolutely. So again, I think kind of what we heard from Enda Curran is the labor market is pretty solid across the board. There were some revisions downward for last year, but by and large, you look at these numbers and they're pretty darn strong. And so if you're the Fed, perhaps another reason to just kind of, sit on the sidelines a little bit.
Footnote, Carl Weinberg, Mary Chen, up the Taconic, they're selling eggs. They're selling eggs at a dozen.
Oh, man.
Ready?
Yeah, go.
$16.72.
I mean, well, you can switch to brown eggs. They're cheaper.
I don't know. Carl, he's like raising eggs. He's doing better with the eggs than he is.
He's selling them?
Oh, yeah. He's got a chicken farm.
Oh. So he's like doing arbitrage?
Carl Weinberg, thank you for that note. From New York City, this Jobs Day, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by IBKR. Will the year-over-year change in the U.S. PPI exceed 3% in February 2025? At IBKR forecast trader, the yes was recently at 39%. What's your take? Trade your prediction at ibkr.com/forecast. Not a lot of movement ahead of the cash open. Stock futures groping for direction. Yields are higher after the jobs number. The economy adding 143 jobs in January, 143,000 in January after an upwardly revised 307,000 in December. The revisions for the previous 2 months totaled 100K. Amazon saying growth could be lumpy because it can't keep up with demand for AI stuff, and those shares among the most actively traded pre-market, and they are lower. Dow futures up 37, S&P E-mini futures up 3, the NASDAQ futures up 8. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, Kevin Hassett weighing in with John Farrell here moments ago. Yesterday, we listened to the Secretary of Treasury. Here is Mr. Bessent.
Right now, the priority is tax policy. Once we get through that, then we will think about that. The priority for a Fannie and Freddie release, the most important metric that I'm looking at is any study or hint that mortgage rates would go up. So anything that is done around a safe and sound release is going to hinge on the effect of long-term mortgage rates.
And just on the debt ceiling, the political theatrics of it is something that you're going to be dealing with this year, at least. Do you think that it's time to talk to bond owners about how they view this ongoing saga in Washington?
So that's a prescient question, because one of the things that our markets desk, who interacts with our large debt holders, is speaking to them about is the debt ceiling. And I want to get the data. I have an opinion on it, but I'm not sure how our large debt holders feel. On one hand, it's kind of a mea culpa, or it's a confessional that we have to do. Oh, forgive me, we've overspent, we'll never do it again. And then on the other side, there's the unthinkable tail risk that there could be an accident. And so people get very worked up about it, but I can tell you the United States of America is never going to default on its debt.
The Secretary of Treasury in conversation with Saleha Motion, and we thank Saleha for all her work, including her outstanding book on our cash and our Treasury Department as well. The conversation of the day on the American labor economy after these revisions. Anna Wong joins us. We're going to get the markets open in a couple minutes and come back with Dr. Wong. Anna Wong, were you surprised by the revisions after all the analysis and uproar?
Yes, I was quite surprised that by how small they are. So in the benchmark period that covers April 2023 to March of 2024, we only saw 589,000 downward revision. We had expected closer to 700,000. And I think part of it is because I think that BLS still has not entirely updated the birth and death projection. So in the second half of 2024, we had expected about 200,000 downward revisions, but instead of a total downward revision, we actually see a cumulative positive revision, all of which almost came from December of last year. So I think my bottom line is that, number one, BLS has not completed the updates on lowering the birth and death projections. And second, there is a real improvement towards the end of last year, particularly in December, in terms of job growth. And I think it's possible that the labor market is in a mist of stabilizing right now.
Wages came in a little bit better than expected. Dr. Wong, how do you think about the wage component of this labor report?
Yeah, I mean, I think partly this is the beginning of the year, and oftentimes in the beginning of the year, you see, for example, firms in financial sector pays bonuses, and we did hear from a lot of Wall Street firms that bonuses this year were to increase significantly compared to the last year, and so I think part of that is that. So it's still very noisy for a January read of average hourly earnings.
Anna, we're going to come back. We've got to get the market open. Dr. Wong will give her a little more time to look at the analysis, but really, really important there. We'll feature Anna Wong on Single Best Idea today. Here again, the job work she's done on the complex American labor economy has just been extraordinary. Sweeney has willed the market higher. It was red all day. And Paul, it just won't go. It's got green, and I don't want to oversell it, but it won't dip.
It won't, it won't dip. Again, for those looking for a healthy 10% pullback in the market,
it's not happening.
We haven't seen
well
it in
said.
2020. Yeah.
The buy the dip. There's no dip. The VIX 14.97. John Tucker on the jobs day market.
And the opening bell report right now, as we look at it, not a lot to see here. S&P 500 up a point. The Dow Jones Industrial Average just turning lower, down 4 points. I mean, it's back and forth. NASDAQ 100 right now, opening trades has it pretty much unchanged, just up 1 point. I guess the real action right now, the yields, the 2-year space, which is more policy reactive after the jobs report, 4 basis points higher, 425. The 10-year, maybe we'll get another crack at 5 basis points higher right now at 448. And among the most actively traded, have to go right to Amazon.com. Those shares down 2.9% after their earnings report after the close. Kind of a lumpy report. Amazon saying growth could be lumpy. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your opening bell report, Paul and Tom.
John Tucker, thanks so much. Again, the VIX 14.97. Anna Wong, on the labor economy, and if we can stagger to your study of March 7th when we see the February report, we will do that within a great fiscal upset. Who knows what Congress is going to do and the president on our debt and our deficit. How do you begin to research that? How do you study the months forward in our labor economy?
Yeah, so, Tom, one of the reasons why the labor market improved in the fourth quarter of last year, and after all those revisions today that we got today, we know now that there is indeed an improvement. It mostly came from government hiring. And now we have, a very difficult period for a lot of federal government employees. And, the last time I saw a number of federal employees taking the buyout is about 60,000. And by the end of all this, we could see 100,000 federal employees resigning without replacing those jobs. So which means that could boost the unemployment rate by up to 0.1 percentage point by our estimation. But certainly, if you think about the driver of this stabilization over the last 3 months, it's coming from the government sector. And so, there's a lot of headwinds in that sense. So I'm not sure this stabilization would be here to stay, given all the headwinds.
So what does that mean for the Federal Reserve here? And I know you guys were looking for 75 basis point rate cuts in 2025. Is that still the case?
Yes, because I think one of the takeaway from the revisions is that the supply of labor was actually very, very high. We saw today that the population counts in the household survey increased by 3 million, and the labor force increased by about 2.2 million. And then I think from the Fed's perspective, this supports Powell's often asserted case that the labor market is a source of disinflation, not a source of inflation going forward. And we also see that market rents are coming down really sharply in the past 2 months. And we know that rents take about a third of the weight in the CPI basket, which is why I think that the evidence is still for disinflationary forces in the economy.
Anna Wong, thank you so much. Greatly appreciate it. And congratulations again. I'm going to not mince words, the most influential market economist that we've seen in the past 12 months, Anna Wong with Bloomberg Economics. Love her work. And of course, look for that on the Bloomberg terminal. Her wonderful work out on LinkedIn. She's very generous.
Yes.
Of her time with
and
LinkedIn.
I was just reading her one of her research notes from this morning in response to
you
the
did
job.
More than me. I never read them. I just talk about them.
Exactly. But again, holding to that 75 basis point rate cut call for 2025, whereas the market's more at like 50 basis points, and there are a lot of folks we talk to, Tom, that think maybe even less than that. So, but she's sticking with her call.
Anna Wong, thank you so much. We need to say thank you as we continue into this hour. The Paul Sweeney hour coming up, because Alex Steele gone, or what do you got going?
Back, thankfully.
Back, good. Alex Steele, not John Tucker, with Paul Sweeney at the 10 o'clock hour. Well, it's if she she's avoiding congestion tax. We'll have to see on that. Stay with us. We have much more on YouTube. Subscribe to Bloomberg Podcasts, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After the jobs report, stocks right now kind of groping for direction. S&P 500, 9 points higher. That's up about 0.1%. The Dow Jones Industrial Average, dead flat right now. And the tech-heavy NASDAQ 100, 79 points higher. That is up right now, 0.4%. In the yield space, seeing the 2-year right now climb about 4 basis points, up to 4.25, I'll call it 4.25. 10-year, the benchmark is about 5 basis points higher right now. That is at 4.48. Among the most actively traded, you have shares of Amazon right now. They are lower. Reported better than expected revenue and profits for the holiday shopping period, but the stock down because of disappointing guidance for the current quarter. As shares of Amazon, right now, they are down 2.1%. Expedia shares, they were rallying after the online travel agency reported fourth quarter results that beat expectation of the company, also reinstating its quarterly dividend. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
Thank you, John Tucker. Appreciate it. We're going to switch gears or get away from the jobs report right now and really talk to Allison Boxer of PIMCO about the Fed. Our research notes really very Fed. I'll get 3, 2, 1. Fed, it's Friday. Fed-centric. Got it. Nailed it there. And we're thrilled that Allison can join us in studio this morning. You have over 290 portfolio managers at PIMCO. They all hate you because they got to deal with a dual mandate. They got to deal with data dependency, and they got to deal with forward guidance. I started the week on a rant on forward guidance. After this jobs report and the revisions and immigration and the variability of our data, is there any value to forward guidance?
Yeah, Tom. Well, first of all, thanks for having me into the studio. I think all the things that you just highlighted really speak to the amount of uncertainty that both market participants and Fed officials are dealing with right now. But I think the jobs report this morning was a good reminder that for the Fed, in some ways, their job has actually gotten easier over the last couple of months. With the U.S. economy still, looking solid, good jobs numbers this morning, they can be patient. They can stay on hold for now. They can wait for more inflation information and more clarity on policy from Washington, and they can look to reduce rates, further later this year.
The data dependency. Who were you talking to earlier that has like 5? Was it Anna Wong? Has like a lot of rate cuts in.
She's got 325. Yeah, total. 75.
Do you do the game? Do you play the parlor game? Like, how many rate cuts are you telling Jerome Schneider he should look for?
Yeah, so we do play the game. We do make forecasts, but I think for us, it's really less about what's your point forecast for the Fed and more about what are the distribution of risks and what is the market priced in. And I think that the really key point for us from fixed income markets is markets are pricing in about 50 basis points of rate cuts. That's kind of in line with what the Fed guided to in December. But I think importantly for us, we still think the bar for the Fed to actually consider hiking rates or become back in that world is still really high. So when you think about, fixed income markets with, not a huge amount priced in, the Fed's ability to be patient and yields still elevated, we think that's a pretty good environment, a time to be excited about.
So, I mean, there is, I would say, a small but a growing group of folks that say, hey, the more the Fed can wait, because of the data says they can wait, maybe the odds go up that the next move, or whatever it is, will actually be an increase. How do you think about that?
Yeah. Like I said, I think we still think that the bar from here for actually talking about hikes being back on the table is quite high. I think we certainly see scenarios where the Fed's on hold for a prolonged period of time. But I think we've seen in the past, anytime you get a little bit of a growth scare or more concern about jobs, there's obviously a lot of uncertainty on where the labor market's going to go. The Fed has a dual mandate, and they want to be sure that they're not just focused on the inflation side of things.
What is the balance of that dual mandate after this jobs report? To me, that's the heart of the matter.
Yeah. I think the labor market strength does make it easier for them to focus more on the inflation side of things. Not as worried about having to cut to support the labor market.
Do they look at the nuances, or are they really looking at the blunt instrument of 4.0%?
Yeah, I think with the Fed, you have to always assume they're looking at every data point. They're dissecting, every detail about the labor market, just like economists are.
At the end of the conversation, somebody's going, Paul, 4.0%. What do you want to do?
So, Allison, how does it, as an economist, how do you deal with all the policy pronouncements coming out of Washington, D.C., whether it's tariffs, which is an economic policy in theory? How do you kind of deal with that? Has that impacted any of your forecasts?
Yeah. I think it goes back to this idea of thinking about the risks and really focusing on scenario analysis. So we think about what is a baseline outlook for the economy, but really focusing on what are the potential risks. And our view, our sort of cyclical outlook for this year has been this idea of uncertainty is certain, and really thinking about investing in an environment where the potential range of growth and inflation outcomes is just wider because of policy uncertainty, not just in the U.S. but abroad as well.
Allison, thank you. Allison Boxer with us with a brief from PIMCO this morning after the jobs report. The Dow up 52 points. The VIX is a headline number to me, under 15 decisively, 14.93. I did not expect that on Monday.
Nope.
No way.
Nope.
I did expect Michael Barr to be here for the news. With the news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. The International Criminal Court has called on its member states to stand up against sanctions imposed by President Donald Trump. The Hague-based court said today that the move was an attempt to harm its independent and impartial judicial work. The White House issued the executive order yesterday in response to what it called illegitimate and baseless actions targeting America and our close ally, Israel. It was referring to the arrest warrant that the ICC issued last year for Israeli Prime Minister Benjamin Netanyahu over alleged war crimes in Gaza. A second federal judge has blocked President Trump's executive order rescinding birthright citizenship. A day after a judge in Maryland blocked the president's order, senior U.S. District Judge John Kuhnauer in Seattle issued his own preliminary injunction, accusing the president of trying to change the Constitution.
There are moments in the world's history when people look back and ask, where were the lawyers? Where were the judges? In these moments, the rule of law becomes especially vulnerable. I refuse to let that beacon go dark today.
Meanwhile, another federal judge is putting President Trump's buyout offer for 2 million federal workers on hold after unions called it arbitrary and unlawful. The administration says more than 60,000 government workers have taken the buyout deal. Get ready for another round of winter weather this weekend. Bloomberg meteorologist Rob Carolyn has the latest.
Michael, yet another winter storm headed towards the mid-Atlantic and Northeast for this weekend. Winter storm watches are up for the New York City area and for Boston Saturday night and into Sunday. We'll see snow, sleet, and rain developing in the district tomorrow afternoon. It changes to rain there, not a big deal, but we could see 3 to 5 inches of snow in the city during Saturday night and into Sunday, and more the same in Boston. I'm Rob Carolyn, Bloomberg Radio.
Thanks, Rob. Rob will be back in a few minutes. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, and John.
Michael Barr, thanks so much. I mean, when Barr's yapping away there, it's a good time to do a log linear extrapolation, right?
Yep.
Gold.
When is it not a good time?
It's true. Gold at $29.02, up $26. I just did a log extrapolation of when that puppy hits 3,000.
Yeah.
You ready?
Go.
February 24th.
Oh,
like,
yes.
I thought it'd be like April.
Yep.
That's how fast this thing is moving.
It's moving. It got the Chinese central bank buyers, Chinese citizens buying, other central banks across the world buying. There you go.
And what's great is my color scheme of my log extrapolation harkens to the colors of the Buffalo Bills and the Detroit Lions.
I see. Yep.
So it's a melange of losers.
Right, exactly. There you go.
How do we put that? I don't think Michael Barr, I'm going to talk to you again. Michael Barr, have a wonderful Super Bowl. Thank God the 49ers aren't in it.
Thank you for now causing me to sleep on the couch.
I just can't wait for Tigers spring training. The Dow up 44 points. Nice lift to the market. Look at the VIX. I mean, come on, Paul. 14.83.
Exactly. Bringing it down. So, again, we got this market a little bit higher here, Tom. Lifting just kind of throughout the morning. S&P's up about 0.25%, and NASDAQ's up about 0.4%. On the back of that data, that the headline was certainly weaker than expected, but other components, if you dig into it, like Enda Curran does at Bloomberg News, you find a lot of strength.
The 10-year real yield now lifts up a little bit, 2.07. So we had a 199 print. We've come up about 7 basis points to a higher yield, a better, more buoyant, I want to call it a more buoyant GDP place, sort of my quick interpretation here at 9:49. Please stay with us. We're on YouTube. Subscribe to Bloomberg Podcasts. It's Bloomberg Surveillance.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney in New York. John Tucker's here in New York. I'm Tom Keene in New York. Cy Benson's in New York. Our global technical director's in New York. Vanessa Perdomo is not joining us.
Where is she?
Where is she? Joining us now with the best job on Bloomberg this morning in New Orleans is Vanessa Perdomo, host of Bloomberg Business and Sports, and all of her work with Bloomberg Originals as well. Vanessa, you know, you're talking to Hall of Fame worthies as much as you can. Are you going to talk to the Hall of Famer Donald Trump when he shows up for the game here on Sunday?
I'm not too sure if he's going to give us the time. I don't know if he's in town exactly yet, but you know, he's definitely going to be here, and it'll be a sight to see, I'm sure.
You're outside
Probably
Cafe,
some fun.
Outside Cafe Du Monde last night in all of the French Quarter. Of course, a horrific incidents in New Orleans. Tell us about the scene there of this Super Bowl, and particularly after those terrible tragedies of a month ago.
Yeah, absolutely. You can tell that they really, after that incident, they really ramped up security here in a way that I've never seen. You know, I've been covering the Super Bowl for Bloomberg the last 6 Super Bowls, and this is security they've never done before. Every Uber driver I've gotten in has said, this is more than anything we've ever seen before. And, you know, this is a tourism city. They're used to big events. They host things like this all the time. There is cops everywhere. There's military, armed rifles everywhere you can imagine, even in the convention center with all the VIPs.
I mean, Paul, here's a partial score. Perdomo 6, Keene 0.
0. Vanessa, talk to us about Radio Row. I was there way back in the day when there was like a handful of sports stations. Now it is a complete industry in and of itself. Tell us about Radio Row. What happens during the week?
Yeah, Radio Row is this really interesting time where current players who didn't make it in the Super Bowl or former players who, you know, they come back every year and they are all representing a brand. There's 80 to 100 media outlets here for them to do any kind of press. And it's kind of that time where we all say, hey, come on, we'd love to talk to you about what you're working on in business, you know, what you think about the big game coming up, but also, okay, you're working with Emmitt Smith's working with Narcan, let's talk about it.
You talked to Hall of Famer Joe Montana recently. What's he think about the state of the NFL?
You know, Joe had a lot of interesting thoughts about it. He thinks that everything's, you know, on the up and up. Obviously, he asked him about adding an 18th game, and he said, as long as, you know, they're taking a game away from the preseason, I think, you know, it's okay. But as long as they check in with the NFLPA and see if everyone's on board. I asked him about them adding a game to Australia because that is going to be a huge, you know, travel day or travel week for the teams who are going to be involved. And he said, you know, even as a former player, he was getting calls from his friends in Australia that want him to go down there. So I think he said it's great for the league to be expanding in every place that they can.
Vanessa, one final question quickly here. Mrs. Keene emails in, ask Vanessa, the halftime show, thumb up or thumb down?
Absolutely thumb up. We have Kendrick Lamar here, who's going to be playing the halftime show with SZA, an amazing artist. There's, you know, rumors that Lil Wayne's going to come out, but Kendrick Lamar just won the Grammy for Record of the Year and Song of the Year, so he's going to put on a great show.
Vanessa, I can't wait to talk to you next year from your 7th Super Bowl. Vanessa Perdomo, go away. I mean, what a gig she has with Bloomberg Business Sports.
I got Lower Manhattan to go visit a client. That's what we did our remote.
John, did you get
Super Bowl?
With the congestion tax, have you been below 59th Street?
You know, it's kicked in like $250 a day for me since I get here at like 0 o'clock in the morning. So
it's reasonable. Yeah.
No, I didn't say reasonable. I just told you what the amount was.
Oh, okay.
It's death by 1,000 cuts, I call it.
John Tucker, thank you so much for that View South. We will have a View South again. Vanessa Perdomo for Bloomberg Radio in New Orleans. We got to come on. It was the best halftime show ever. Thanks to our team for a great week. Shakira, Alex Steele insisted. Shakira.